Oh, baby. This gonna be born day today. Maybe. Maybe quite boring today. Quite boring. Blub, 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 blub. Okay. We're going to have a day of nothingness. I'm just kidding, guys. I don't know. Maybe. Maybe I'm kidding. Maybe I'm not. Hard to say. Cool. That's not really fair, is it? How your flippers doing? My feet? My foot, one of my foot's fine. I don't know. Never was hurting. The other one is not good still, but I got the ortho report back. There's no torn ligaments, no swollen ligaments, not really swollen anyways. They said there was some obvious like problems with swelling, but it wasn't like serious damage or dislocation. There's no fractures. So basically, it's a big nothing burger. Although the nurse told me that if it's black and blue, which it kind of is grossly colored right now, that she's like, well, you know, you may have strained it or sprained it, and sometimes that can last just as long as a fracture, if not longer, so you need to be careful. And I was like, well, that's not comforting. I was kind of hoping that if they gave me the all clear, that it would be like, all right, cool, get right back to it. I mean, obviously I knew I needed to heal, but ugh, yeah, that sounds really painful. Yeah. Well, yeah, my pain is weird because it migrated. It was on like the top of my foot for the first few days, like really bad. And then it kind of like moved down into the ball of my foot, and that's where the pain has been lately. And the coloration changed too. Like it was really swollen on the top, and then the swelling like moved down towards like my toes. It's a really strange injury. So I told them like, oh, I hit the top of my foot, because that's what I thought happened. But now I'm kind of wondering if it really wasn't exactly that. Maybe it was like not a ricochet, but like I don't know, just like a compression of the whole foot or something. Something bad. So my toes are like black. It's gross. They don't hurt, but the ball of my foot is still really uncomfortable. Anyways, I'd love to say lesson learned, but I really don't know what happened. I mean, I thought I did. I thought I knew what happened. I thought I roundhoused the guy's elbow. That's what I remember happening, but who knows, you know? Maybe it was something else that really caused the injury. It's hard to say. Hang on just a second. So Yeah, it's gross. And I'm not like, not in like, I don't have a bad attitude about it. I'm just kind of ready for it to be done, I guess. So it's been almost 2 weeks, so it's like, all right, you know, I injured my foot. I get it. Let's heal. I'm doing everything I can to stay off of it, but I'm getting really like antsy. I don't like sitting around with my foot elevated. It's just not my nature to just sit still for weeks on end. So I was messing around with some other stuff. I'm gonna have to kind of fix my charts up a bit. I was messing around some things, trying to get my charts in a good position, and I haven't really finished yet, so I'm gonna try to reset these so that we can see better what's going on today with the price action. Oh, I forgot to share the link. See, I didn't do that yesterday either. It's a Discord group. Usually they're pretty active, but oops, wrong channel. Whatever. We'll see what happens today. If the price really just kind of stagnates, I may not stream as long as I usually do because there's just not really any reason to, you know. If there's nothing new to talk about and the price kind of stagnates, it's not really worth going over the top for. We do need to address a couple things, like on GME specifically here. I can see there's a couple things that are problematic already. So here's the problem on GME right this second. So it went up and it pushed and made a higher high. You can see on the RSI, if it's hard for you to see it on price action, usually you can see on the RSI a little bit more clearly. So if you're like ever like, oh, I don't know what the heck a cat ear looks like or whatever, I mean, it's usually really obvious on the RSI. You can see like these are, I call them iterations. And it's like one of those things where, again, it's like you may not, I mean, yeah, these visually look very similar. All of them do. But they really see it very, very, very clearly on the RSI. You can see the two tops here. So here's the problem, right? The model here has been a model of sell-off, not a model of running. And we have to just accept it for what it is. So the word iteration, meaning like repeating, it's not changed yet. And so when you look at this, you can see a very clear pattern here, right, on these tops. And I don't want to overstate it, but there needs to be like kind of a common sense approach when you're looking at pattern analysis. And the common sense approach here would be what constitutes a change of character, right? So there's like a few different things that have happened, and it's good to just kind of recap it. This is just scientific process, if you will, just kind of stating the obvious. So one thing here was that on each of these tops, you have bearish divergence. Now I'm on an hourly chart. It might be different on other time frames. Don't really care because it's very clear here and I like that. So I'm going to leave it there for now. But here's a problem, right? You have a bearish divergence on all of these tops. Okay. Now, when you talk about bearish divergence, what that means is that the price action moved higher and the RSI failed to go higher. Usually it's coupled with a lack of volume on the second push. So there's like a big volume first push and then lack of volume on the second. Now the exception to this rule is right here. Going into earnings, this was obviously different because there's still a high amount of volume in the second push. But on the whole, pretty much been the same thing all around. If we continue backwards, it may even be a bit of a stretch, but we might consider this also to be, you know, a similar situation back here. I'm not going to try to like figure out where it is or whatever. I'm just going to look at these presently because this is where it's been, price action has been clearly narrowing, and it's just, you know, pretty straightforward. So one of the issues right now that we're going to deal with is this going to do the same thing that it's been doing. Well, I got to say right now it's not looking too hot, because there's another thing that happened every time this push happened. So you get the second volume, right? I'm going to get rid of this box real quick. And the volume isn't as high on that second push. And you get the higher high, and then you have a divergence on RSI. Now on the hourly, again, you could pick your time frame, but on the hourly, this doesn't look divergent to me. It looks like slightly not. Now it's almost what we call like a mild divergence, which is like flat, meaning like if the RSI approaches the same spot and it's like, for example, an obvious distribution motion, then you would say like, okay, it's a mild divergence as opposed to a strong divergence, which doesn't necessarily mean it's going to be like super bad. These other ones were really strong divergences, really obviously strong divergences. So this is a little bit different already because at least on the hourly, and again, it may be different on different time frames. That's not approaching the same. You also have this kind of bounce in. I don't really want to focus much on that. I can kind of see it each time, here, here, and here, really this whole thing right here. And each time it's kind of shrinking down and it's making higher lows. It's also making lower highs. And I was going to say this is the other thing we want to kind of focus on, which is what happened after the divergence happened is that it passed back beneath this blue line. And that's very important because this represents not even an opinion, in my opinion. I mean, you could say it's an opinion, but it's like this is very clearly like the trend to break. As in, this is stopping around the exact same trajectory every time. Now, it's pushing up slightly each time. That could make, for some adjustments. I did put a little yellow marker out here just to kind of indicate, like, technically the creek could be a little higher. It could be all the way up here at 2248. But I think this blue line, just looking at where it's being anchored, every time it's going through this motion, I don't want to call them bears or bulls, but the market is very, very obviously responding at the same spot, which again is this blue trajectory, and you're getting that sell down every time. So what does that mean? Well, yesterday we kind of talked about it, and I said that we talked about it for like a little bit. I didn't mention it too much, so you may have missed it if you were in and out of the stream yesterday. But basically what I said is that technically this is really strong because it kind of bounced off this marker in the middle. It doesn't look like it on this time frame, but on the higher time frame it did. And I was like, so, technically this is pretty strong, but it's still whipping around this yellow mark, which you can see visually is kind of an intersection as well of this blue and red. That to me is probably just indicative of your wedge, but you got to remember, like, where is that yellow line coming from? Why would that be significant? Because it's not enough just to say, oh, it's whipping around this random yellow line. It's not random. It's the highest of these kind of breakout parallels. So when I look back at the big picture on GME, I've got 4 of them. The reason I have 4 is because all 4 of these were checked on the way out. So when it took off in May, all 4 of these were checked. 1, 2, 3, 4, and then back to 3 again, and now we're back to 4 again. And so almost like music, right? You're kind of dancing along these bars. And I think that's really important to note because right now you're basically sitting on the highest possible creek level. And if it holds, there's no reason this shouldn't just push off and go to the upside. So it's a contingency, but it's important contingency. Like, it's one that you would definitely want to consider. And then what's more important perhaps than that is that on the higher time frames in this latest, because again, if I go in like real close, this line gets adjusted a little bit. But on the highest time frame, this line represents not only the center kind of mark of that wedge action, but it also seems to have hit it, like bounced right off of it. And that's usually a sign of strength to use something that's considered a middle as a support. I talk about it in range analysis all the time. Like where we were on GME and I said, I don't know how many times I've said it, but I said I think we're going to bounce right off of that 485 before we leave. I still think that. Like, I still have this drawn out to going back to 485. You should hit center liquidity and push off of it. Arguably, center liquidity for this has raised up to 495, not 485, because this is like slightly elevated. And so it's kind of changed over time. Initially, it was 485. Now it's about 10 cents higher, about 495. But you would expect it to go to the middle and then push off from the center. That just happens every time, basically. And it's an institutional move, typically. They can control it from the middle because a lot of retail doesn't buy from the middle. That's just Wyckoff theory, and I think it's true. Most people buy from the tops and the bottoms on a range. The same thing applies to something like a wedge. You'd have people selling on the tops here and then buying on the bottom. So if you were looking at this as like a wedge, you would say that every time this has kind of come down low, specifically around 2050, we've known that for a while, but that was initially touched back in May before the secondary run up, and it was where we wrapped around when we came down. So weirdly, we're talking about this on AMC, and we were talking about how it's 485, right? We were just saying that a minute ago, and that's true. That's where that happened right here on AMC. We don't talk about it very much on GME, but where that particular bouncing happened on GME, that reaction at the bottom was at 2050. It was very low. So it's kind of odd when you think about it from that point of view. For a long time, it's kind of like, I would even say, like, I thought GME was kind of weaker in some ways because it kept going down. You could see it as like these massive swings, and it just looks like it lost so much, going down here on these bounces. That's not really the case. If you recall, like the first days, this did like a 618 retrace back up, and AMC did not. It just flat out didn't go there. It went up to 6, which isn't even close to a 618. The 618 would have been like way up here at like 830. So it's kind of odd because it felt like towards the end of this like 5-month or whatever period, 6-month period, that AMC was holding up better because it was just sitting flat. And it was kind of delaying that drop, but a lot of it has to do with the relative distance traveled. Like the distance traveled here to here, from the 485 to that top near 6 versus the distance traveled here to here, right, from the 2050 all the way up to like $45. So there's a significant difference in terms of like how they set up, but they're both going back towards that same point, like over and over and over again. And they're really wrapping around the same number. It's just that GME has these extreme moves. So it feels more volatile because it is. And it also feels maybe weaker at the end because, again, like AMC really hovered high because it never rose. Like it never went really far up. Had GME had those big, or had AMC had those big reactions, we probably would feel like it's worse, because we feel like, it went really low. This is essentially what happened to GME, right? It's like, it went really low, really far down. And I think that's important to note because these things are really like, I use the word proportional. I'm like an artist kind of mindset. Proportion has to do with size relationships to yourself. So like we use the word proportion. You talk about the size of your head, like your body compared to your head, for example. Like everybody's roughly about 6 heads tall. That's not true for everybody. That's just like an average. That's a proportional thing. So if somebody has a bigger head, they may be a taller person, so on and so forth. And then, of course, your superheroes are like 8 heads tall. They're really elongated, weird looking, things like that. So we talk about that. The size of your foot compared to your head, that kind of stuff. So when we talk about proportion in the market, that's really what I'm talking about is the distance traveled from that anchor. And the anchor for GME has been 2050. The anchor for AMC has been 485 largely. So it's interesting because, again, that kind of shifts my perspective personally, because I look at it and I'm like, well, in some ways we're right where we need to be then. You know, we're kind of right above that 2050 mark. And again, this is very significant because we just pushed off that 2050 area. And so each one of these iterations, they're not perfectly copy paste, but they're very, very similar in terms of perhaps, you know, the divergences, except for this recent one. And then the goal here, the reason I just went through all that is it wasn't pointless. The reason I went through it all was to remind ourselves, like, what is the goal here? What was the point of doing that? Well, the point of doing that is to get you back to that 2050 marker repeatedly. It's not necessarily to distribute to new lows. So even though every time I say the word distribute, every time I'm saying like, oh, it hits this mark and it distributes, it's not like it's going down to break new lows every time. It's really just going back to that liquid center that was established way back in May over here. Like, it's an anchor for the range. And AMC largely was doing the exact same thing for 90% of this time, you know, up until recently. Exactly the same thing. Like 1-to-1. So in regards to proportion, they're different. But in regards to like, what's the operation here? What's the point of all this? They've basically been doing the exact same thing. So at this point, the difference between the two is kind of clear, which is that AMC clearly would have to be considered a spring at this point. We already did the comparison to the March 2022 run-up. Really strong comparison, really simple comparison. We marked it off. These are the more important markers here. The kind of middle anchor has risen, and I think that it's important to note that, again, it was 485 in the beginning. Over time, that slowly raised to like 495. So this is a bit of a rise. So even though it was going back repeatedly to try to push down and get that breakdown, eventually it did, right, through here. And you can see that marker is kind of reversed, right, late in the game in September. Even though that happened, the overall center liquidity has risen. And that's important to note. So anyways, I digress. So what I'm looking at right now is I'm looking at, okay, we've got a pattern. It's repeated multiple times. The pattern is to kind of bounce in around the 2050 level. They were trying to knock it down here, perhaps to trade shares below 2050. They're trying to get to this kind of gapped region, probably because it was gapped over twice. You can see that the original gap was around 17 or thereabouts, maybe 1740. I don't know which one I marked off. It gapped up. It traded way, way, way high, right? And then came back down. You can't even see it on the chart. It's like way up here. And then it came back down. It anchored itself on 2050, and then it did a dive for liquidity down to 1785. And we did talk about this previously, and I had some theories that we might be trying to get a spring, and we would have to come slightly below or slightly above. No, it was like slightly, what was it, 1770? I don't know. It was a while ago now. But it was basically between like 1830 and 1770. We'd have to come like basically right back down to that $18 mark if that's where we wanted to have like a spring action. And I doubted the same thing would happen on AMC. I was wrong about that because I thought that 4060 was a stronger bottom. And it is. It has more supports. But that's changing now that we're down here and we're building out in that same region. So here's where we need to see a change of character. All of that was to say that if you look at this motif, okay, you got to be mindful, like, okay, if the goal is to just get you back to 2050, any kind of support built at or above 2050 is going to be a pretty important support build. If you're looking at what would be the goal to get to more of a spring action, you're going to look back at August 5th and consider going down to about that level, and you'd have to distribute here and break 2050. So it's a long way to go. It's not like a simple breakdown. Like there's a lot of levels between here and there. So we would have to kind of wait that out, and that would have to be something pretty dramatic. So yeah, right now, what's it setting up to do? Just looking at it, being straightforward. Okay, it's not quite a bearish divergence. I went to a higher time frame, it's not there either. Maybe on a lower time frame it's there, but it wasn't there on like the 4-hour. It was kind of fine. It looked fine. There was no divergence. On the 30-minute, there's no divergence. So if there is one, it's got to be basically like a flat divergence, which is a weak divergence. 15-minute, yeah, there's a divergence on the 15-minute. So this time frame has the highest RSI is back here on this first hit on October 14th. So there is a weakness there. It looks a lot more like a mirror right here. So you can see the pattern very clearly. That's a double M top. We talk about that quite a bit on this channel, where you have that cat ear motion, the wave, up, down, and then within the top of the wave, you have a distribution, up, down, up, down. You have one in the bottom as well, but in this case, it's pretty like wide. You can see right here, the build out for that lower M and then the top M again. Okay, that's our basic algorithmic movement, if you will, in terms of like waveform and range analysis. So actually this is good because the fact that we have sorry for like raising my voice, but the fact that we have an adequate M that's very clearly mirrored on actually it's really good, because we can't easily measure these things if they're not, I don't want to say obvious, but if they're not really obvious, it's sometimes really hard to measure them. So what you want to do is you want to look at the middle M cross, because if this breaks down, that's where it's going to try to go. That looks really low, but that's just the way that it is. I don't like to fudge it. It is what it is. That would fall in line with kind of this idea that you might try to get back to the yellow line, which is about 20 bucks, or maybe get back to 2050 again, way down here. Certainly seems like reasonable. It's not like way out there in terms of estimation. It might look like it, but it's really not. Think about it this way. Like, this is a bear trajectory. This is like bears trying to establish a trend. That's the direction they want to go. If it breaks down, that's the direction they're going to try to get back to. Usually there's more than one indication that they wanted to go that way. Anyways, probably what we could do is look backwards. This is a tough one because the middle's ugly. But we probably could look back at this trend back here on this first cat ear. And again, this kind of points back to perhaps where we might be trying to get to if bears succeed and they're able to take it as far as they want to go. They don't always succeed, just like bulls don't always succeed. But you look at that, and to be honest with you guys, like that just looks like they're trying to go back and touch the bottom of the wedge. It's basically triangulating perfectly to touch the bottom of the wedge on Friday, which I don't know if that's going to happen. That seems kind of unlikely, but a lot of it will depend on whether this distribution follows through, because again, it's doing what it's done before, and the last few times it's done this, it has had pretty massive moves back down. You know, these aren't small itty bitty moves, they're big swings. This was a 11% drop. This one before that, go back to the top, was a 20% drop. Okay. So change of character would be what then, Booksy? You're talking about it like it's inevitable, like it's definitely going to go down. I don't know if it's definitely going to go down, but I would say that it looks to me very convincing, as in they've already done a push up through the, and this is where I was kind of like shaking my head about it this morning, because they already did a push up through the top. It did close above the creek, but remember the creek has been raised quite a bit. There's a kind of a gray area here. This is just where they're choosing to anchor those distributions for whatever reason. They're using it because it must be working. It's that simple. I say they, I'm talking about the market on the whole. Like, people are looking at this saying that's the top of the wedge. Whenever it pushes above it, we're distributing. And so there's a sell-off that's happening. There's a weakness that's getting set up each time. You can really see that mirroring here as well, back here in this time frame. It's really clear. So this is very good for us, because anytime you have like consistency in the market, you should take advantage of it. So one of the things I like to do is I like to look at the M shape in terms of where it jumped the creek. This one's kind of weird because it kind of came up and then back through it. So I don't know. It's not that far off though. These are 15-minute bars, so it's not like a huge difference. It's like 15-minute difference, 30-minute difference, I guess. But we can do like a window just to be safe. That should be it. No, a little further over. Yeah, that's good. That window's all within basically, I don't know, like an hour. It's not a lot. It's like 1 hour of time. Yeah, so that would be roughly where you might expect the wave to kind of finish, if it's going to finish. Now, I'm going to take another step here backwards, and I'm going to look at this as if it's a much larger M shape. So you're like, what? Iterations, right? So this is all built upon the same premise, exact same thing here, right? It's just a larger iteration of the same thing. Iteration means copy, but it's not always copy-paste. It's copy within itself. So you see the exact same kind of motif inside of these tops, and that makes perfect sense to me because, again, that's the algorithmic component of the market. You don't have to have some kind of magic understanding of market to understand that, okay? I'm against the idea that it's some kind of special knowledge that nobody can figure it out. It's very simple, and it's always the same, and it's usually this, all right? But there are rules to it, and we'll get to that. So what we want to do now is look at this big picture and see if we can also identify maybe a longer term waveform here. And I'm going to go from, see here I went from the top. Well, you might be wondering, like, why didn't you go from the bottom? Because I'm kind of estimating when I go from the top, kind of estimating where it actually broke out here. This is kind of confusing because you have to know where that creek is. And it's hard to identify it. I think it's this. You see this peak over here? There's a huge spike on October 3rd and 4th. Mean Girls shout out. And that spike to me indicates that creek cross. You can see that fairly evidently right here. So I'm going to get rid of these two for a second. Not that I don't think they're important. It's just kind of obvious that's where it would go. But this, yeah, this to me looks like the creek jump. So that's interesting. So there's a possibility it doesn't actually drop below there, which is good. And that means that this is the middle. So we're going to use, I'm going to use the end now. I'm going to kind of estimate and see. And so this isn't even adding up. See that? That's like way too short. So this one doesn't look like it's consistent. You know, it makes sense though, because if you look at the overall tops, they don't seem very connected. Like this peak almost looks like the size of the first peak. Like it would have been better for estimating this jump here, assuming that there wasn't going to be a larger one. So unfortunately, this doesn't look like a singular wave that's going to be sensible in terms of size. And I probably should have guessed that because I don't think this one was either. Actually, this one was pretty darn close, wasn't it? Like really close. That's almost perfectly like 50-50 from drop in to breakdown. So what did I do differently here? I don't know. It just didn't work. Or it's already done. You guys are like, what do you mean? It could be that it definitely doesn't look like it's already done. So it looks like they're just kind of dragging feet. Maybe there's a reason for max pain or for, I don't know, whatever people talk about when they talk about POIs and stuff. I'm looking at this and I'm like trying to kind of stretch my brain and figure out why that might not be equal. I guess it just isn't. So it's not going to aid us. That's all I could say about that. You're like, yeah, but it broke out right there. Yeah, that's cool, but that's not really what we're looking at. We're looking at the wave here. So if you can't measure that wave, and again, simple way to think about it is just up, down, up, down. it's an expansion, so it's kind of tricky. It's not really working. So we're not going to use that. We're going to use basic stuff like trends, and probably look at this as if it's a widening, since it's widening, and it is widening. And there is a, there's a established creek trend back here. So this is built into, again, the bullish nature of it. Like there's a support, and then there's like a double rejection right there, and there's a rejection. And that's defining the movement of where we're going in the future to these peaks. So I'm going to use this as the measurement tool for the local area. We know this is like the little distributive top. They're trying to go down again. But I'm going to use a widening for the full thing because it seems to be, for lack of a better word, it seems to be like an expansion. Like it's a widening of the, so the timing of it's not going to be 1-to-1. If the widening breaks down, it would break down right here. So I don't know why I didn't see that, but there it is. So I was like staring at it right in my face, and I didn't even like see it. I'm just sitting here looking at it. So there's a clear, strong intersection right there. So that's the creek jump that happened here. It's failed to advance, and immediately anyways, it's failed to advance above the largest creek possible, which is the big jump. So it's starting to do that distribution cycle that it's done before. If it held, and if it does hold, it would come back down to here to 2076. Oddly, that looks like it's going to intercept the widening at the exact same time that we measured out here. So I don't find those things are very coincidental. They're usually mathematical. So if it's mathematically setting up that way, it's mathematically setting up that way. It's not really something you can force. It just happens because it's probably because it's right. That doesn't mean it has to get there. That's not how it works. That's not how the market works. It just means that that's the target. So I think that for now, yeah, and I know this is lower. We were talking about that a minute ago. This is like significantly lower. But I think that for now, yeah, see that? They did it right here too. They pushed up and made it high here before pulling back. So it does exist. How about over here? That actually is the M cross on this one too. Okay. So there seems to be a really concise target today of 2076. I don't want to bet anything on it. I'm not going to bet anything on it. I'm just going to leave it there, and we'll see what happens. But it looks like 2076 is in the sights. Of bears. They want to sell it back down there. Let's see. Did they leave a gap? They may not have, but I'm going to look anyways. So closing value on Wednesday, closing value was 2168, and then high was 2161 on the opening candle. So from 2168 to 2161, there is a gap. So there is a gap up here. That's interesting. Always good to note. That's important because if we were to return back to that gap, and there may be one over here too, I don't know. I haven't really looked. But if we were to return to that gap anytime right now, we would be above that creek. So very, very significant gap level right there. So that's kind of it for GME. That's the updated chart. Our estimations were pretty much in line with AMC in terms of timing, that it would be this week or next. I think I said the 14th or the 21st seemed the most likely to me. And what I had imagined was a build out into AMC earnings, but also into elections, which is on the 9th. Some folks think that that's not running if you don't break out of the range. I'm not saying that we will or won't run necessarily because you can't really know until the setup finishes. But I did mention yesterday on AMC that if this comes back down to $4 and it ends the week at 4, and if it comes back up to 450, like both are positive. I'd almost prefer 4, weird as it sounds, because I'm worried that they won't make the move early. If they make the move today and then they come back down to 450 or they chill out at 450, that's fine. But if they wait till the last minute, to, Friday to jump to 450, that could be kind of meh, because it could be like an up thrust, and then they could just easily rug pull Monday, and you wouldn't be able to argue with it because there was no support built. However, I've been watching this range really carefully. It does have the classic M shape that you see. This is a double top right here. So it double bounced on 424. And at first I thought that's not necessarily a good thing, and I still think that's not necessarily a good thing because it's the third time it's rejected there. But they also double bottomed here on the low of 1414, which is kind of interesting because it could have been that this was like a phase B top that was just like a double top rejection, but because it didn't make another low, it's like, I don't know how to describe it without going too crazy with Wyckoff stuff, but basically, like, because they didn't make a lower low and then they didn't make a higher high, I think that you can kind of group this together as all part of that auto reaction, and then this could be your phase B top, which means that if it were to come low at this point, it's actually cool. Like, I'm totally cool with that. So here's what we would expect to see right before that happens. There's a couple things, right? So number one is, remember the M shape. So you have a 1-2, and then you should have like a 3-4. Now we don't know exactly how perfect the timing is going to be, so on and so forth. But generally speaking, what I like to do, I'll get rid of this for now. Generally speaking, what I like to do is look at where it jumped the creek in the middle. So in our case, there was what I call like a beak, which is really just a curve down. That curve was like parabolic. We're out of that. And then I mentioned how when you look back at something like March 2022, it does the same thing. It iterates. We actually did the same thing right here as well, by the way, back in June. And it was really easy to kind of read the outer motion. But it has to get out of that first bounce. And sometimes it does like 1 or 2 flushes. Sometimes it does up to 4. And so like if you look back at March 2022, AMC did like 4. And that's actually kind of what we did here as well. In this iterative motion down, 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 we did it on the very bottom. We did a 1, 2, 3, 4 really fast. It's almost hard to see it unless you zoom way in here, but it's basically like down, up, down, up, down. And then it does it again, really tiny at 294 before it takes off. That's the last iteration. That's essentially just a small Wyckoff spring. It looks like a micro version of what happened in 2020, which is this kind of motion right here. And on either side you have, this one was really flat in 2020. But in this case, you have it kind of come back down again. And all that is just like a hook here on the on that wave down. And so this motion right here is actually fine because, again, it's auto reaction, phase B top, spring. Totally normal Wyckoff behavior. When it does it on like a micro level, sometimes it can be really erratic and strange looking, but it's the same exact thing. Like, it's all there. The parts are there. It's just not doing it like widespread like this. In our current time frame, and this is what I was talking about yesterday right before we left, we are still doing it. It could be very much the same. It's just, again, spread out kind of wide. So right now, that's kind of what I'm looking at is like, all right, if we came back down, where's the floor? I think it's about $4. And you would dip beneath 403, potentially 404. So I'm looking at this as, all right, it could be that situation. There's another situation, which is an S curve. And if you don't come on here very often, I'll just say this. This motion here that goes into a spring, that's actually very bullish. I'm just not doing a distribution, just only if it's a accumulation. this motion right here is actually the same in terms of what people will call fractal analysis as a motion like this that goes to the upside. The only difference is that this jumps the creek and then this doesn't jump the creek. And so for lack of a better explanation, that's kind of what the explanation is. So if the M doesn't jump the creek, it could still be very bullish. It just has to come back down and make a spring. Usually it's a liquidity reason. It didn't advance. If it does jump and it manages to hold above, we don't usually get that that spring move. This is what happened in like 2021 run up going into May, is we jumped the creek. We didn't need to go back, and so we just kind of kept going, right? And then it did it again, right, at the top, and you ended up with that nice, really clean little SOS guy that you see in 2021 in that June run up. It didn't look like that, but you get the idea. Okay, there, fixed it, right? Okay, very similar though. The only difference is that in one case, you get this push out that jumps the creek early, you get an advancement, you don't make another low. So people would call that an LPS. Some people will look at this and say, well, that's true, Booksy. It could be that there was a spring there, like in this case, if it's a reaccumulation after a rise, could have had a lower low here still, but it doesn't really look like as dramatic. It still jumped the creek. Yeah, that's true. It just depends on how it's set up, or it could look more like a wedge, which is what a lot of people see because it's just visually easier to see that kind of stuff. Doesn't really make a huge difference. The wave is what I'm concerned about, and where is it advancing, where is it failing to advance, right? So this could still be bullish if it comes down, so long as it makes a spring and then jumps the creek, right? It could be. When it does that, I usually call it an M. When it doesn't do that, when it jumps the creek early, this is where we get what I call like the S-curve, because it typically makes the same move back to the upside. And this is where you get that really clean 50-50 move that occurs sometimes in the market, up and down. And it just, to our naked eye, it just kind of looks like an S-curve, right? It's an early advancement. So two possibilities. And that's the funny thing is, like, people say like point of interest and they're thinking about big events and stuff. And I agree, like big events can cause a lot of movement in stocks. But I actually think every single time you get to the second M, you're at a really important point of interest. Like we're there right now. You can see it visually. We're there. If it's jumped the creek and it makes the advancements, it can go. It doesn't have to go back down. And this is the difference between, again, like something where you're looking at it and you're like, oh, it's going to make an S-curve to the upside where you could measure that. And I actually kind of already did on accident. You can see it measures out to 433. That makes sense because we're basically sitting at a halfway point between where we made a low at 404 and where the previous top was at 434. Now, maybe the issue with that is that that doesn't actually necessarily advance. So that could be a problem if you thought of it that way. Like could be like, well, it doesn't really necessarily advance there, so that's not good. But there's a mixed bag. One is that we have sort of got a cross. We've got one cross here. So this is the first double M. You can see it jumped over that wave. Then we've got a bottom, and then we've got another double M forming. The first one and the second one both have tested this pink line coming down. So the first one you can see kind of bled through it a little. The second hit right off of it, right around 415. The issue that I'm finding with that is the steeper creek that we can draw. And I think this goes all the way back to another analysis I did, which was a comparison to 2020. This is the one that you want to jump. This is the key level to jump. I'm not going to ever change it at this point because I'm very confident it's the right one. We had an opportunity back here on the 13th, and it changes depending on time frame, so don't like overthink that. But basically, like we're kind of extending it outward in order to accommodate for the movement that's happened. That should be it. Like that should be the big jump. That makes me feel very, very good about, again, the price action going into the end of the week, because even if it doesn't hold this move here, and it's kind of struggling right now, we're not sure if it's going to hold it. If it drops here, it's going to drop beneath this rising support. I've been referring to this as the ice because it's essentially the same concept that is talked about in Wyckoff like 2.0 basically as ice, which is a support level that is holding up. It's usually like a secondary support. It's not technically like a creek in the same sense, but it's sort of like that. It's like that's where it's elevated. And the ice is really important because it can define the movement within the range. And sometimes it can define a breakdown. Our ice is basically right below that liquid center here. It's basically at 414. So the same breakdown would happen on this rise. So I'm going to refer to that as our ice. That's the trend breakdown here. Okay. So even if that broke down, there's a chance that it doesn't actually go below the creek again. So that's one thing that you could look forward to. Possibility, right? Hey, I mean, it jumped the creek. Maybe it doesn't go back below it again. The other possibility is, okay, well, what if it does, Booksy? Okay, so what? If it goes back below it again, there is a possibility it does that, right? We don't need to like kind of sugarcoat it. Let's say, for instance, that it just had like a really harsh drop into Friday and it hit like $4 or something, you know, and this all happens starting today and you're like, well, this stinks, you know, it's not working out. Yeah, I get it. It's not fun. But it's measured out that way anyways. So for the time being, I don't really think it's worth like overthinking it. I would suggest to you that, yeah, that's pretty much it right there. It looks like it's aiming for that floor again right at the end of the day. You can see it visually pretty easily. So it looks like it's trying to get to that floor back down to the bottom at 403 by the end of the day. But here's why I'm saying like this isn't a huge deal, I don't think, because to me right now it looks pretty healthy. I don't think this came too high. 426. 426. It like tapped that mark right there. 426. I don't think it came too high so that it breaks the top of the range. To me it looks good. So it looks like a clean build out into Friday with a potential to either S-curve up to the top, back at 433. Again, I'd prefer 450, but whatever. Or the waveform is pretty clearly measured out to get you back down to the bottom here, and you can see that creek drive here. It's very evident, straightforward, right there. So that's the wave back down. So this fails to advance today. It doesn't look like it's going to do it. It hasn't pushed back above 425 again. So it kind of rejected, went high. Then the second one pushed up. It didn't even make like a second advancement that was higher than 424. It looks a bit weak right now. It could hold the ice at 414, but if it loses 414, almost guaranteed it's going to go back down to $4 end of the week. I would almost guarantee that because I think that that's the way the setup is being built right now. So very similar in terms of movement. If GME breaks down here, you can see it's already kind of dropped that ice support potentially. If GME breaks down here, I think it'll be a very similar story going into Friday, although this looks like Thursday to me. So we'll see. I don't know where it would be on Friday. So we did like a really fast, that's almost too fast. Looks like it just completely dunks. What level is that? That's 2075. That's at 2076. It's like right here. Okay. It may not be that timing matters. It may be more about the level. So I'm just going to make sure that the level's marked off. So you can see how that would be really similar if this breaks down here and heads low. But I got to be straightforward with you. It would need to have some kind of whole nother day's action here. There's like a day missing. So I don't know. This is where we get into questions about how low do you go? Are you trying to get back down for a distribution? Like what? And I think, again, the goal being perhaps to get back down to sub 2050. So if it didn't hold, you could just chill out at 21. That'd be fine with me. There's no rush because there's no real reason to like go anywhere if you don't want to run it this week. This is only assuming it doesn't continue an advancement. If it goes back up and fills the gap and it holds above here, it could just advance. When we're just back to the high scenario of just kind of pushing out early this week. And frankly, I'd be looking at this high on the widening. But for now, I'm just going to assume that it's going to kind of pitter out and then probably, how far back does this go? Just curious. All right, I should have looked at that earlier. So there's another trend here that's even lower. That could be the goal for Friday. Maybe to come back down to this pocket here. Maybe 2050 or thereabouts. Hard to say. I'm just thinking about it in terms of like breakdown versus not breaking down, what I think is likely to happen. This seems about right to me as a potential end of the week. The good news is that in some of these cases, we'll see what happens. That could indicate, yeah, you might need to, this one actually looks really clean. Sorry, I should have done that. Left it on the chart. That looks pretty good. Just to walk through there and see what you can get. Some of these might indicate like an S-curve that you're still going to try to drop maybe and get to that lower level first thing Monday. But I'd be pretty bullish if it ended up thereabouts. Again, because of the nature of like a potential bottom there, you may need one more drop Monday, but I don't think it's going to need to go like significantly low on AMC. It really just depends. We'll see what happens. I've got to wait. I'm going to wait till tomorrow to do that because I want to see how this builds out. I don't really have any other trajectories to use right now. So I think it'd be silly to try to like estimate that without having like the information of today. I think this is probably enough for today. And then the only situation that doesn't go up today or that doesn't go down today is if it makes the cross over here, it'd have to like jump twice and then it could advance back to the top. I don't think that's as likely personally, but just because of the way it's set up with the tops being the way they are. Some of this might depend a little bit on IWM. Talked about it yesterday. I wanted IWM to break 225 and then close above 225. IWM is the Russell 2000. It's the small caps. We don't typically see a big run on AMC that's sort of disconnected from the small cap market, and especially now because of the ETFs. They have such a huge impact on these little guys. We saw a massive buy-in on May 15th. It was a little late, but there was a big buy-in. And there's been a lot of selling on AMC. I think a lot of folks don't want to face the music there, but there's been a lot of selling. There was a institution that dropped some 600,000 shares already from their original position back in May. I was reading about it, and it's like SG Americas LLC or something. And then we know that Vanguard had a pretty sizable short position. They've actually been exiting their short position over time. They lessed about 100,000 of that. But there was another bigger short institution that hasn't seemed to change their short position, or at least they haven't reported a change. And they may not, we may not know till way later. They don't seem to have been budging on it. We know that a lot of institutions invested in May, and we know a lot of institutions invested as well right here, oddly, right before the 13th, because I think that they were anticipating that could have been a breakout moment. I don't know if a lot of those guys have already sold off or what, but this has already dropped like $1 since then. but there was a huge amount of investment. I've talked about it before. You got to remember, like, institutions don't care about other institutions. If Vanguard has 30 million shares, and they do, and their price average is pretty low, and it probably is because they reported it back here. I don't think it's substantially high at this point. I think they've probably got a decent average. It may be close to $4, it may be below $4. That was kind of what we estimated, was somewhere between these two ranges probably. They're not hurting by dropping the price. Like, it doesn't hurt them to drop the price closer to their average. If their plan is not to sell right now anyways, if they're going to take it up again and maybe sell it again, they're not going to care. So you have to think about it from like the point of view of an institutional trader who's pretty much just running based on an algorithm that's set up. They don't care about the short-term downside as much as we do in retail. And so when they're looking at this dropping down, it may not affect their pricing at all. Like, they just don't care. They're not going to sell it just because it dropped a few bits. They may have sold some at the top just to instigate selling, but I've not seen any reported change, and they've reported it multiple times through here. And the only thing I saw was a little bit of addition in this region. I didn't see anything reported as being majorly sold off on Vanguard's part. So the weakness that you're seeing is coming from, I think, institutional sellers who are not as committed maybe to AMC, or they think that perhaps because it didn't break out with IWM, that it's a weakness. And that is common, although it usually happens on a quarterly basis, not like in between. They're not usually going to be shifting positions around dramatically between those quarters. So like you'll see like major changes like in March, like the second quarter, as they pick the ones, which I think is what we saw this year. March, April, May, we saw a lot of changes as they're trying to pick the winners and the losers they're trying to get rid of. So right now, we're going into an earnings season. It would be silly, I think, for a lot of institutions to be jumping the gun on selling or whatever. I haven't looked at estimations, but if you guys are familiar with Zacks.com, they're pretty well known at this point. I think most people know about them. I don't know if you know this about them, though. If you've only kind of heard of them and you're like, well, it's just another paid service or something. The way that they do a lot of their estimations is based on frequent changes. So they look at a metric of changes right before earnings reports and stuff. So like a lot of what they do is look at analyst reports and how quickly the analyst reports change going into like an earnings or something. That's like one of their key metrics that they use. And they talk about it if you go look at their site or whatever. But they look at, okay, if you're approaching an earnings and you're really close to it and all of a sudden a bunch of analysts start changing and they're increasing what they think is going to happen. There's like I forget what they call the effect, but it's like basically like earnings is lowballing. So when they do earnings reports for these companies, it's like an aggregate lowball. It's what the company should be able to reach. So you have to understand that, because when a company beats on earnings, a lot of times retail gets really up in arms and we're like, why the heck didn't the stock move? You know, it beat earnings. They beat it by this or this. But they've already set the bar low. Like earnings traditionally in those estimations that are put out there, they're not high. They don't expect a lot. When they rapidly change their expectations last minute, it's because there's like a momentum in that trade. So that can mean that there could be a drastic beat, and that would be very, very, very positive. Meaning like the data's coming back and it's way higher than expected, and that low ball is now like really outdated really quickly. So that's one of the metrics that they use. And I don't really keep an ear to the ground typically with that kind of analytic estimation stuff when it comes to AMC. But it is important to note that, because then some people are like, well, what's the big deal, you know, if you beat by a few, you know, or if you miss by a few cents, it's not that big of a deal. Well, it's not a huge deal, but then you have to remember, like, it's already lowballed. So it's like somebody didn't expect you to do that well, and then you failed to even do that well. That's not a great thing. So it's sort of like a minimum expectation. is what earnings typically represent. So if we double beat on an earnings, that's great. If we miss something on an earnings, even by a little bit, it's not a huge deal, but it's also like, okay, something went wrong because this should have been an easy target to beat. That's typically the way that it's presented. So that's one of the key metrics that they use. And I'm curious if other people do follow that, what you guys would say about that, because I don't follow those kinds of things. But we are getting really close to our earnings report for AMC. I'd be curious to know if there's a change in analyst expectations going into earnings within the last weeks or months. If there's been any dramatic changes, that could indicate something really good as well. For those people that are interested in what most call the POI, that's what that's about. Me personally, I think that this is accumulation. I think we're in a spring motion. I think we just need to see the pushover for 40. I'm not positive it's going to happen before earnings, but I think it's definitely possible. And I mentioned it early in the stream because I was talking on the Discord about it. I think yesterday someone quoted me saying that I didn't think it was going to move until earnings. I said it's possible because there's a lot of space here to do whatever you want to do. And certainly if for whatever reason the bulls want to shore up $4 more, they don't want to take it up and they're bullish, but they just don't want to move it. They want to trade down here first. Yeah, I mean, like you could build out an accumulation right here on a rise and just kind of take your time day by day for the next 10 trading days or whatever. That's not even a big deal. And they do that. They'll buy up and let it go, buy up, let it go, buy up, let it go, buy up, let it go repeatedly. And it can take like 9 trading days. They'll do that over and over and over again. And, you know, and then they'll chill it out and like kill it and then let it die right before they decide to run it. We see this all over the place on AMC. This is what happened right before the January run up, right before the March run up. It's all there. So like how long does that take, Booksy? It takes like 9 to 12 days. So like if there's a desire to do that kind of a motion here and continue to trade low, yeah, absolutely, that could happen. There's also a possibility that the rip begins early and it pumps up into earnings. Now that could be kind of scary because you don't want to see a rug pull at earnings, but absolutely that's a possibility. And that's kind of what I have over here in terms of like earnings and election season, is putting it in a position of, I almost think that this is a little bit more bearish because to run up early, because if you run up early, my thinking is like, why would an operator run up early if they expect it to do well? If you expect it to not do well or to sell, maybe you get the earnings pump, right? But then to be in a position where you're ready to sell is kind of scary. Because in a distribution, you would push it back to the top or you'd push it as high as you can in order to get rid of your shares. You'd let retail buy the FOMO and you'd be selling. And that's why distribution always goes back to the top, usually before it advances through the bottom. What would be frustrating about going up first, we wouldn't really know. It's like, yeah, it could be positive, could be negative. But I wonder, part of me wonders if they might do that because elections is very heated this year and there's a lot of uncertainty. Like the polls are very mixed and they're not clear. And in an election year where they're very clear, you kind of already know who your winners and losers are. That can be priced in. So they price that in a little early maybe on an election year. On an election year where you don't know, certain sectors are going to be getting rug pulled the day after election. You know what I mean? Or the week after election. There's a no-brainer, right? It's a policy thing. So I'm wondering, part of me wonders if they might take it up early for that reason, that they're not necessarily sure who's going to win. And so they're in a position where, sure, you could be in an SOS and just take off, head back up to 850 and then maybe 13 versus, well, crap, maybe it's not who we thought it was going to be. We're going to rug pull and just go ahead and sell back down to 3. And part of me thinks that makes more sense. It's more of like a equilibrium type space than being low here. And I know that sounds a little backwards for a lot of people. They're like, I don't get that. Why would you think that? It's just the way that the market is. Like, it's the way that distribution works. And I always think about, I may not always be right, but I think I try my best to give myself get in the mindset of an institutional trader as much as possible. Like, why would you take it up? I almost think that this is like way more uncertainty, like taking it up to that SOS range around 5 or 6 first, or even not even that far. You could take it up to like 512 or something, because that would be back within this wedge. Like, that could be a place that you sit as well. And that makes me kind of nervous, because I wonder, where could you have the most advantage? Either liquid center or the top would be the most confusing, and it would probably be the place that you would go to if you're not really sure. I feel like if you stay low down here, there's perhaps a greater confidence that the institutions have that they're going to take it up. It doesn't mean that they couldn't hook. Like, for example, let's say you spent the whole time and you did the whole thing going into elections, and it stops here, right? And you're like, well, that's great, Booksy. We wasted all this time, but we finally got out. Yeah, this could end up being like the big rip that you're looking for, right? Where you're just kind of like taking off to the moon. But technically, you haven't broken back above a number of things, right? There's this trend right here. This is like a secondary ice level, if you want to call it that. That would be a place you could still distribute. And remember, if the goal is I want to distribute around the middle liquidity, which is also very possible, it could be a very simple matter of just coming back up to 520s and then dropping it from there. So you could do that from down low. I guess what I'm saying is that I'd be a little bit more uncertain about an upside move from if we were already at the top. That's all I'm going to say about that. I don't want to make people like flip out like there's a billion different options. It's not quite the case. Really, like, this is sensible and then this is sensible, but both of those are essentially the exact same thing. It's just one's running higher than the other. The resulting action is also only one of ever. It's always up or down. That's super straightforward, right? There's nothing to it. What I'm trying to do, I guess, is I'm trying to see if I can understand, like, where would you try to go, And I think that this region at like 511 to 514 seems pretty likely for uncertainty, and then also 6. I feel like being down low, it's almost like a guarantee. I know it sounds weird, but it's almost like a guarantee that it goes up from here, because you'd have to come back up to distribute or to run. So it's like, well, the move is probably going to be up first no matter what. So it's like a game of statistics in my brain. I'm thinking about like, well, what's more likely to happen? Anyways, we're getting close, okay? But the idea of it running to 6 isn't beyond it. I think that it's very possible. When you look at what happened in May, it was like pretty insanely fast after it hit that spring. That's a bit unusual, but it's not out of the realm of possibility that we get a really rapid fire move leading into earnings in November, on the 3rd or 4th or whatever it is. And I think that that's really possible. I genuinely do. And if you're wondering, like, well, what's the size of that move if it does do that? That's like a 50% move. That's not a small move. I mean, it's a big deal move. The only concern I guess I would have about that is like hiking up the options. Again, it kind of just creates that level of uncertainty that I'm just not really super comfortable with. And like, why would you do that? I don't know. So some people look at it and they're like, there's no way they're going to run it up there. Never going to happen. Yada, yada, yada. I wouldn't be so sure about that, You never know. And the fact of the matter is that either of these makes sense to me. I mean, and they're both reasonable places to position yourself going into the elections. So about the most kind of mundane would be for us to just kind of stay flat here. There is enough space to do that, but again, it would be highly unusual. I want to say that even if this hit a low, let's take a look. That's 18 days. That's not actually quite right. We need like trading days though. So let me think. So going into elections, so Friday the 18th to Friday the 8th is 20 days, but it's not actually, let me think. I wish I could remember like how many trading days that is. You subtract however many weeks times 2 for 2-day weekends. 20. It's probably going to be something around 16 or 14 to 16. That might be about right. And it's possible. Yeah, it's possible we still are at like 4:30 at earnings and elections. Because this could be like that pre-earnings pump, maybe to 460s, and then it comes back down right before takeoff. But either way, like this would be really positive. If I saw that and you saw the buy-in and let go, buy-in and let go, buy-in and let go, it's kind of telegraphing it. So anyways, back to IWM. You guys are like, you started talking about IWM like an hour ago, Buxy. I'm just trying to hit all the highlights, try to move forward. So the thing about IWM was that I was thinking it was going to move first, and that if it moved first, and it did, it advanced starting on the week of, it was late. It was a very late Friday advancement. It wasn't exactly like first thing. But I thought it was going to be the week of the 8th, the 7th and 8th. And it took most of the week. And then on Friday it moved. Honestly, I've been a lot more accurate on IWM than like anything else. And I've been lamenting why I haven't just been trading IWM. I should just trade this ETF because I've pretty much got this down pat. I don't even know. If you go back and look, it's such a silly thing for me to say. It sounds really boastful, but like, if we go back and look at this, like, there's like a chart that I did like way back. I basically thought it was going to be here and then go up a little earlier than it did. I thought it was going to go up by maybe October, but like end of October or beginning of October, which is pretty close to where we are. But I was like, this is basically what my chart looked like back then. And I'm just like, why didn't I just trade this? I don't know. I keep saying that, and then I just don't do it. And then every one of these moves has been pretty easy to see. And the breakout that happened here was really good. It went right above 225. That's the level that we haven't been able to hold a support above. My only concern right now is it got really overbought, and it's up on a pretty high time frame, an hourly or so, and it's never really gotten that high lately without being sold off. So most of these peaks have been going into the top. It kind of peaks and then it peaks again. And so there might be another leg here up to like 230s before a pullback. I'm starting to think that maybe that's what happens before elections, is that we get like kind of a peak and then a pullback. But they made a gap, and I say they because it's probably just institutional traders. I mean, I don't think that many people trade after hours in retail. There's a gap down here in the 223 to 224 range. So the issue was yesterday, well, crap, you need to stay above 225. You don't want to see it push up and then come back down in the same day. That is more typical of a up thrust, which is distributive, and you don't want to see that. On the other hand, there's pretty clearly like a gap, and so could you possibly go up and then distribute and come back down through the gap? Yeah. You can have what's called an SOS with a backup, but you don't really want to dump creeks when you do that. And so the only creek that I can give you right now is from this peak back on the 31st of July. I'm just going to kind of estimate it and kind of rough it out. I honestly think we're probably sitting on that right now. I'm going to get rid of this yellow bar. It's distracting. We're probably sitting on it right now. Yeah. You see that? So we kind of walked across it, and now we're kind of pushing down right beneath it. So we're sort of sandwiched between 224.94, which is that resistance, and then that creek. So there's a bit of an issue there because it did drop it. I digress about that, though, because I back up about that a little bit, because AMC and IWM in that regard are kind of different. AMC, when it drops a creek, it's pretty much done. But these ETFs like IWM, it's gone beneath creeks before and recovered pretty fast back above them. So the issue is that, let's say, for example, this is like a 50-50 S-curve, and it could be, and that's going to go down and try to get to a gap fill. Well, the closing value here was, looks like 223.10. So it closed very low. Very, very low. So let's say, for example, that it did do that. It backed all the way up to 223.10. It's pretty close to what we were estimating as like a 50-50 turnaround. Does that put you in a position of weakness? Yeah, a little bit. So looking backwards, you can see that there's a bit of a widening here on this trend up, going up to this top. So there's a problem, right? This is an issue. So dropping that creek is very important. It's obviously in that spot for a reason. And we've positioned ourselves in a kind of a place of uncertainty. I don't want to talk too much about this S curve, but it's following pretty well. When we redux the X curve, we had to redo it a little bit. When we did the redux on it, I used a different measurement tool, which was this breakout here as the 50% mark. Instead of like the earlier one, which was this macro S curve, I used a shorter term one starting back on August 5th. So you can see like it's built out pretty well, pretty clean. And when you look at the overall trend in the price action, it looks really solid. Well, it is gravitating towards it right now. You can see that it almost landed on it here and then broke down off. I'm not a big fan of saying that that's some kind of support or resistance because it doesn't really work like that with an S curve. I think about an S curve as like I know it sounds silly, but like a wiggly trajectory. Like it's the general direction that the price action is moving along those curves. And so sometimes it'll respect it, but it doesn't have to. It's more of like a general direction. So early on, I mean, looking at it visually, it's like, nah, I mean, it looks pretty well respected. You can see visually, again, it's like the wave is almost perfectly like wrapping the S curve. And I don't find that to be, again, like coincidence. And then when you move away from it and react back to it, you kind of come right back to where you were before. So you're seeing like that wrap around here. And I find that to be extremely telling of possible direction. Now, from that point forward, maybe I got it wrong because you can see like visually, I don't know, it's either really below it. So this is high, low. Maybe it's doing like a mirroring around it. Or like a reversal, almost like a rotation. That could make sense, I guess. I hate to add more stuff to this chart, but I kind of want to see this visually. Yeah, maybe this is like a rotation around. So this is top, bottom. That's what it looks like. See, on this one, I didn't do that. I kind of have it cutting through the middle of them. So I hesitated for a second. I thought maybe you could take this down. That doesn't really work. It just loses the rest of it. I think it's where it's supposed to be. Yeah, so I think pushing away from this is actually possibly a good thing because it could be like a slingshot. What matters the most to me is the creek jumps and whether or not you've made the adequate moves. So this wouldn't have worked out if they didn't kind of build that support on top of this creek here. Like it wouldn't have mattered that the S curve existed. Remember we were talking about earlier that movement of jumping an S curve and like versus not jumping it, jumping on the M and versus not jumping on the M. And you have that leap of the creek, and if it jumps, it can make the S curve, and if it doesn't, it usually goes down for a spring. Well, that's what I was planning for back here. It's no different. So I had that low, you can see that low stuff drawn down bottom, and then yeah, and then I had a higher situation where it came up high, and that's the way it ended up going. It didn't drop through here, which is good. It's fine, right? It stayed above the creek. Well, you have a similar thing here locally happening. You've got a jump, and it needs to sort of prove itself. Like it can't come back beneath this creek again, which is very low. And you're like, wait a minute, you're saying it basically can have like a throwback. Yeah, it can. This is not way out of left field either. We just did this. I would even argue it's probably an iterative motion. You can see right here, gosh, it looks like it, doesn't it? Now I'm staring at it. It really does. It looks like the same motion that occurred here with this pump, doesn't it? Where it tried to like hold that creek and then it, that's exactly the same. Why didn't I see that before? I don't know, because I wasn't looking for it, I guess. It looks exactly the same to me. So you remember that, some of you guys are like, I don't know what you're talking about, dude. You remember the S-curve that we said it was following a first? It was this guy over here. And notice that this like goes up on top of it, and then it drops through it, and it goes really, really low all the way back and does like a full retracement back to the bottom. Well, I'm staring at it now, and I'm kind of scratching my head like, well, I didn't see it a second ago, but I see it now. It's a shrinking iteration going up, which typically doesn't end well, but if it will keep going, it'll keep going. It's not a big deal. Meaning like the iteration can go until it's exhausted. But usually if it's shrinking to the upside, when it finally gets to wherever it's going, it could be kind of painful. Yeah, it's the same. I don't know why I didn't see this before. I just wasn't looking for it, I guess. That's the same iteration, or that's the same, yeah. Some of you all are probably kind of lost. Maybe you don't see what I'm seeing. How can I make this simpler? I don't know, get rid of everything. I hate doing that, but sometimes it helps. And it maybe helped me too to draw it out better anyways, so. How do I get rid of everything without getting rid of everything? How about this? How about we go make a new IWM chart real quick. Yeah, get rid of everything on here. I think it should already be gone. And then that way I can use some of these same markers. That should work. What do you think about AMC's conversion notes at 566? Once price hits 566, they're ready to convert to shares for about $500 million debt reduction. I don't know. It sounds good to me. What's the... Are you worried they're going to sell or what? Converting to shares doesn't necessarily mean anything unless the person who's converting sells. There we go. I don't want to be I don't want to overcomplicate that, but there's more to it than that. But yeah, this is good. $500 million in debt reduction. Yeah, I don't know. Okay, so this is not, it's not one-to-one in the way that you might think, because you're probably wondering like, well, you said it was one-to-one, but it looks like it's a little different. The reason is because of the, we're going to have to do different colors. The reason is because this is like compressed and going upward. So I don't want to like, again, I don't want to overcomplicate it. It's simple enough that it should be easy to understand if we don't overcomplicate it. But it's definitely what it looks like to me. So it's setting up as if it wants to go back down, and that's where it kind of cued my interest, because I was like, this looks really familiar. Like we just saw this on IWM. It's the same level too, which is frustrating, but it's iterating towards this top here. So maybe that helps, maybe it doesn't. Another way to look at this is to think about this in terms of, I mean, I think this is pretty straightforward, but if you don't feel like it's straightforward, this might help. Is just think about it in terms of a wave, like up, down, up. Like a wave on a wave. It's kind of confusing. But this is interesting to me because I could not have drawn that I still look back at that wave and I think about that S curve and I'm like, I don't feel like I could have drawn it any differently. It's evident in the movement here because you have to respect, this chart has to be respected. So it has to be between here and here. You know, like the S curve itself can't be just some willy-nilly thing. It has to be anchored on a move around, like a waveform around a trajectory. Like that's what it is. So I still look back and I'm like, I don't really see how I could have drawn this significantly differently. It just doesn't register in my brain. Like there's nothing else to draw. I'm kind of adjusting it a little bit, but you get my meaning? Because it's not, that is the wave. Like that's where it tries to achieve, again, the move back to, it's almost like a hook, right? So it comes up, back down, tries to advance again, fails, comes back down, resets here on the floor. And then I'm going to make this blue so it matches that color scheme of the blue stuff. And then you have the same thing happening again right now. So it did it again. It did another wave. So it's, both of these are just trying to advance into this 228 level. That's just the level to beat right now. So this is the advancement that gets stopped. So I'm going to make it like flat. There's a hard stop right here. There's a hard stop right here. So what I was saying about the debt thing is like an offering can be done and it often dilutes, but like if you think about the offering in terms of a debt for equity swap, they're trading out one for the other. And the theory is, I guess, that the person who's taking that trade could then sell and cover the debt. But maybe the assumption is they would sell it immediately. We had somebody like do that with, remember Antara? They did that garbage with, Ape. And it was really frustrating because I think that they prevented Ape from really moving anywhere. But at the same time, I mean, looking back at it, what was the point of all? I mean, we look back at it, we don't even talk about Antara anymore because it's just like, yeah, it was a thing that was frustrating, but we already knew like the writing was on the wall for the conversion and all this other stuff. There's a lot to that. I guess my thought is if the company that gets the equity or the share swap, if they get the shares, they don't have to sell them. That's not like a rule. They could just hold them until the price is better. Mudrick kind of did that. Remember Mudrick? I think they got the they got the offering or whatever. I'd have to go back and look, but they sold because they were offered low. They got a ton of money from that because they sold way up high. Remember that? And everybody kept calling them like Fudrick Capital, but I'm pretty sure they made like a ton of money on that sale. I'd have to go back and re-look at it. It's been a long time. I don't want to misquote it, but I thought that's what happened. That was a long time ago. All right, so you have a very similar setup here. There's a double advancement towards same level. Yep. So in theory, I guess the simplest way to look at this would be a return back to 214. And if it were going to do the same thing, here's something that's missing here though, because we're just looking at this as a floor, and we're only looking at it horizontally. We're also looking at these as elevated waves that are kind of obeying some trajectory. There's something else going on that I don't want to overlook, and it's really, really important. So we need to make sure we put this back on the chart. And that's the jump over the major creek. So this is not a singular motion over here by itself with nothing else going on. There's a massive attempt to jump over a creek here. And I think we could do it again right now, but I would have a little bit of trouble. It's going to be tough. No, I thought they sold after the fact. They sold it like, they missed their run to 50s or something like that. I thought it was like in that August area or something. I don't know. I don't want to get too overcomplicated there. Okay, so we don't want to miss the big picture here, which is that this giant cup, which I think this is probably a prime example of an actual cup. For those of you that like cup and handle patterns, this could be an actual cup. Massive amounts of selling on the left, massive amounts of buying on the right, bowl-shaped structure, multi-year structure. This could be an actual cup and handle pattern. So for those that are like always yelling about cup and handles, I don't usually agree with you because they're not typically there. This is an actual cup and handle, potential cup and handle pattern. It doesn't have to have a handle. That's not always a factor, but it's often there. It could be that there's a handle here and then it breaks out. Sometimes cups have no handle. They're just recoveries. You know, it just depends. I don't really care to go into that anymore. So this is big picture, like one iteration here, one iteration here, and then we don't want to ignore that it's jumping creeks, and in this case it plunged right back beneath it. That's what freaked me out about that move, because it came down so low. This also came on like really bad news about jobs market stuff, so it may not be as severe, which again, this looks like it goes all the way back down to the floor, but maybe it doesn't have to. And it does look to me like that's where the gap is, isn't it? Yep. So this might be setting up on a greater amount of strength. I don't know, maybe I'm wrong about Mudrick, but I thought that happened after the 72. I thought they missed the 50. They missed like running up to 50 when it ran back up. They're back in the stock, by the way. They bought in again not too long ago, like 20 million shares they bought from their distressed equities fund or something like that. So they think that it's going to have recovery of some kind. Either that or they're going to loan out shares. By the way, we're down, like, if you look at mutual funds, we're down like 70%. It's been like a huge reduction. There was like 700 mutual funds or something invested in AMC, and it's down to like 200 or 300 now. I mean, it's really dropped considerably. If you look at the mutual funds that were invested back on the run up to 72, like in that area, part of that's because we joined different indexes at different times, and so ETFs and mutual funds like bought in, but it's kind of crazy to think how many have left. Yep. This is it. It is definitely the right line. It's going right off that gap. So yeah, it makes sense that this is an iteration because it's doing the same thing that it did over here when we anchored on this mark. It's basically identical. Basically. It's a little different. It should be lower. Hang on. Though it should be on this guy right here, not that one. If you're gonna do it, you gotta make sure you do it right. Like, I could fudge it and make it look like I want it to look, but that's not very fair or unbiased. Yeah, it might be more accurate because this is the top here. I should just flatten it. It makes it easier for me to see it. this is the top here, and then it kind of peruses the top again, and it goes higher than this one did. This one doesn't ever breach the top. This one does. It's a rise. It's acceleration. It makes sense because it played catch up here. There was like a massive retracement back to the upside. There's probably some other stuff going on, like a little bit of wedge narrowing and trend line supports and all this other stuff. We can kind of add what we want to add or whatnot. Sure, you know, we can add whatever. But I'm going to just kind of keep it the way I want to keep it right now, like this. So there's two markers. One is on, it looks like the 23rd. The second is on maybe the 29th of August. Yeah, and then this is a wraparound of that, distribution, rejection, and then push back up. So there's definitely like, I mean, it sounds horrible. I hate to say like, oh, there's three possibilities, but there's three possibilities. 1, 2, 3. There's three possibilities for bottoms here because all three of these would be valid in terms of a sell down. And in terms of the M cross, this wave up ultimately didn't hold. I mean, it's kind of weird. There's another movement, and this is where things maybe get a little confusing. So I'm going to get rid of these for just a second and add them on this side because maybe I'll do this way instead. There's another movement here around that curve. So this is a way to visualize it as well, to see it play out. So you can see the resistance that's pushing up against this line and then the jump over the line here. It's almost like they didn't want to at first or something. They weren't sure they were going to. So they kept it low. Like it could have just bounced off 207 and then come back down. Instead it advanced and then it came way back down. Like as if someone wasn't. I totally. By the way, I'm like really being kind of arrogant when I say these things. I'm trying not to, but I just remember that. I just won't say it. Never mind. I'll just stop. There you go. Just don't say it. It's that simple. Then you won't be worried about it. Yeah, but you're thinking it, Booksy. I just remember when that fear hit and everybody was talking about crazy stuff, and I'm like, whatever. I think it's just because somebody got screwed back here. I still think that's the case. I think somebody got screwed when this took off and they took it back down and reset positions. I genuinely think that's what happened. It was like a huge majority of the market, half the market probably got screwed over here. And they took the first sign of weakness they could and drove the price down. That's what I think happened. So anyways, there's a push out right here amongst the creek cross. Let's just make these creeks red. They're all the same. They're all creeks, so it doesn't matter. I'm trying to like keep the iterations separate, but we need to just kind of have a consistent idea of what a creek looks like here. So we're going to do that. Yeah. I just remember back here, people were talking about weird stuff like China swap. I don't even know. It was weird stuff. And I was like, that doesn't make any sense to me. That's all I remember. When this drop happened, I was dumbfounded that it came as low as it did at first. And I thought, you know, I bet there was uncertainty back here and somebody got screwed. And they wanted to take it all the way back down and just fill those gaps and do it again. And they have. They bought right back up through there again. The problem is that we're not seeing that continuation yet because we haven't broken this high level. And that's where we're at right now. So we iterated again. We pushed up again the same way. Last time, this didn't follow through. So we didn't actually, as far as I can tell, we didn't actually get to that S-curve. I mean, you can, again, fudge it if you want to fudge it, but that was the middle right there. And we just didn't follow through. So I'm inclined to think, as much as I don't want it to be the case, I'm inclined to think it's not going to follow through again. It may have already, I don't know, may have already passed that torch. It's hard to say. It would be like now. Then I did a second measurement on the other chart. So let me look. Why does that look different? So this measurement goes out to October 25th. Oh, because it has to do with that localized creek cross here. So that's the difference. I'm not using those yet. I thought I was going to make this chart simpler, but whatever. So there's a resistance marker that's established on the middle as well. Why are you doing all this stuff? It looks like spaghetti on the wall. Well, sometimes you get it the first try, and sometimes it's good just to know, like, what information were you trying to, like, really look at. So the move has like a secondary creek cross because it is like, this is an established sell-off and established sell-off, so therefore there is a resistance going down this way. This is a sell-off, and then it sold off all the way down, so there's an established resistance going this way. You can't ignore it just because it adds more clutter to the chart, in my opinion. Like, there is macro resistance, but there's also localized resistance. This is really just that, like, smaller M-shape structure. So to me, this looks like a cat ear 1, cat ear 2 situation. That makes sense because this would be like ear 1, ear 2 kind of thing, meaning M1, M2, M1, M2. Come on, Booksy, use your brain, think. So the M1, M2 is breaking above. It's pushing up and advancing above the creek, the macro creek. So the M2 on the second push advances the macro creek. The same thing happened here to some degree. Didn't really advance it though much. It kind of bonked its head on the same wall. They both do the same thing, but if you look at just the relative creeks for where M1 sets up, they both do the same thing in terms of that, because they both jump from M1 to M2. They both jump that creek, that trend. So there's not really a question there. They're both doing the same thing in that regard. But this is like here. And then I'm doing it here, but I don't have the second one, which is there. So I'm missing it. See, this is why it's important to just kind of like pay attention to what you're doing. So this, you guys are like, yeah, no duh. So this only came back to that level. In theory, this was just super low. So it ended up coming back really low, but this one's not. If it dropped straight down right now, it wouldn't go all the way down to 215. It'd only go to there, which is more in line with, oh, it's going back to check that creek. It could drop the gap fill. It's that second move that we saw earlier. We were marking off like 1, 2, 3. There are possibilities based on those creek lines. I think we were right about that, and you can see this one correlates pretty well. I don't think it goes all the way down. I think this is more likely. This is probably my favorite one. I wonder if that's a retracement too. For Fib fans, let's take a look. People that really like Fibonacci probably be like, why aren't you just doing a Fib retracement, Booksy? I don't know. I like to do them last because it helps me to confirm that I'm doing something right. The Fib retracement itself, I don't want to say it's useless. It's not useless, but it's kind of like, it is what you make it. Like, you can look at a Fib retracement and assume that you know where it's going to go, but at the end of the day, like, you don't really know, because it's just an indication of probable places that the market. It's sort of a self-fulfilling prophecy. So it can give you a good idea of like, hey, these are likely levels that it could go back to. It doesn't necessarily give you the full picture though. Not all the time. So this is pretty good. It looks to me like the 618 area here. I kind of move my lines around a little bit because they seem to be a bit steeper now. And I don't want to like fudge it. Yeah, even so, you could probably make this even steeper and suggest that it could come all the way back down to the 786 level. So it's a bit odd because let's see, that's a 2.9 level. Why do I have a 2.9 level? That's weird. Maybe because I was doing it with some kind of a Volkowski thing. That doesn't seem as likely, but it looks like the 382 is a possibility to the 2.9. And then if you go down further, I gotta say it looks a lot like this golden pocket between the 0.5 and the 6.5. And then I don't think the full retracement, if it does do a full retracement, we wouldn't be leaving until like late, like November, that kind of thing. It would have to be way over here because you wouldn't necessarily want to break that creek. And if you did break it, you'd have to recapture it, that kind of stuff. So I think that there's a possibility for all three of these. They're all pretty good. I like this one the best, the one in the middle, for obvious reasons. I think this is probably my favorite one. So I'm gonna keep this on the, I'm gonna put gold, make it gold right there so I remember. But I like that one because it doesn't go back through this creek. It respects the breakout really well. The M cross here locally is respected with the jump and the hold. And then basically the expectation from that point forward would be much the same, that you would probably do the same exact move again. And I hate that, but that's what it kind of is. There's not really any way of knowing for sure that it's going to do this, because sometimes in an acceleration like this could hit this line earlier. It doesn't have to triangulate to the same point, but just to keep continuity like going, we're just going to use the same point. Like what I'm saying is it could be significantly steeper, but just again to keep continuity kind of moving the same direction. Yeah. What about trajectory? What about it? So this creates a trajectory of 51 degrees. So let's do negative 51 degrees. And that means jack diddly squat. That doesn't mean anything to me. What about macro trajectory? What about this point over here at 273? That's really high, but let me check something. Trying to determine if it's following like a pretty specific wave trajectory. I think we did the one down a long time ago and the one out. I don't think it's that complicated for the most part. 57. I want to say it's pretty close to accurate about how it entered. That's 57 right there. So it looks really close to the big wave trajectory. And let's do like a measurement here on the bottom so we can determine where that center is. And then we're just cutting a sine wave. So a little bit off. That's really close. So that looks good. It does match this this trajectory established in 2021 before that upthrust. There's probably another one on the outer portions of this, like if you go to the top trend and the top trend here. I'm not doing that. I'm just going to use what I have. I think that's a good way to do it. So that is a good trajectory. So let me check one more thing. This should be right. So when did it enter? Hang on, get back. I need to get that back, the midline back. When did it enter that zone here? This was 2021. See, when people say TA doesn't work, I just kind of chuckle. In the back of my head, I'm like, what the heck are you doing? Because every time I do TA, I'm like, what the crap? Like, it's perfect. Like, I don't know where people are getting that from. Like, where does that even come from? People doing bad TA or something. Like, this is the simplest as you could possibly get. Trajectory in, trajectory out. And there it is. Based upon a center point of the bottom range. Like, how much simpler could you possibly get? And you're like, yeah, but you had to pick the right trajectory. Well, yeah, but that's just like get good kind of stuff, you know? Like, you just got to do it right. Look at that. What the crap, guys? It literally hit the same mark, like perfectly. I don't even know. Anyways. You're in a mood, dude. Yeah, I know. All right, you know what I need? I need the waveform out. We're going to get this. I think we're about to get it. We're about to unlock the secrets of Pandora's box here. I can't do it easily without the, I need to see it visually with RSI. It just helps me a lot, so I'm going to use that. I think right here is the middle. Why am I using RSI? Because it's flat and it's easier to visually see it. You see that right there? There's a cross down. So it's basically like halfway across this motion. And then you can see the pushback up. That's a reactive move to try to get back to the trend. But notice like right in the center, there's a crossover. So there's a support, pump, a drop, and then a resistance. So that little M shape in the middle signifies like the center point roughly. And it's probably closer to where the hook is, but it's basically like the center point on that range. The reason that's significant is because sometimes it's a little bit hard to see because it may not obey. It may have been fine on this one. I might have just wasted time. Yeah, see, like this is like way early. It broke this trend like way over here in April. But it's actually not, and then there's another one here. It should be like there. So it could be that it's from another trend established after the bottom, which is what it looks like. So it wasn't actually the bottom trend. Why does that matter? I'll tell you in a second. Because that motion, yeah, I think it's these points here. And I can't even really tell. I don't know. It's like right there. That kind of indicates where that middle is. And then the other thing we can do is look at this. If it is a wave, 41 degrees, 48 degrees, 41 degrees. This is pretty close. 41 is a little more flat. That follows pretty well, doesn't it? So what we're going to do is go to the top here. Ooh. That's interesting. That's the opening value on March 9th. Okay. Why did I do that? Because in theory, what that means is that there's a wave here. So there's an S curve. It's not that hard to see it once you get the visuals in, but like you can see the motion right there. That's the attempted draw. That's the attempted jump. So there's a cross right here. It's just a little tricky, and I wanted to make sure I was getting it right before I said, yeah, this is it. So you want to make sure you get the right one. And interestingly, this usually points, it did a pretty decent job, usually points towards where you're going to go later. We talk about this quite a bit, and I don't want to go into like the theory of that, but it usually does a pretty good job of pointing to where you may go later. Yeah, and we did. We came back and retested that later on. Because again, it's bearish trajectory versus bullish trajectory. The reason I wanted to do that is because that then gives me a wavelength. Because really I don't have positivity that this is the wavelength. All I have right here is that this is, okay, equal parts around the center of a wave. But we don't necessarily know that that's actually the top. And I don't think it is. I think the middle of this cross is actually the top. So now I've got like a sine wave that I can use. And it's going to be a bit dicey. I don't want it to be necessarily at that high. I just kind of like use that as like a middle. It could be anywhere you want it. You could put it like up here for all I care. The point is to get it close to right. It's not going to be perfect because remember, and we've talked about this before, these are channels to the upside. They're not flat. So work on RSI maybe a little bit better to see this like flat. You can see the up and down movement, but it's not happening. I mean, it's pretty clear that this is a cycle. You can see the ups are the ups. So we're not wrong. It's just not tracking with the... You guys are like, well, that's not good. Going to a down cycle, Booksy. Well, yeah, but I think that was kind of a given. With February, or going into January this year would be an up cycle. But you got to remember, like a down cycle doesn't necessarily mean like what happened in COVID either. Because we're talking about a rise versus a run. Even this, back to 2008 matches, that's about where it seems like it starts. No, this kind of goes back forever. I take it back. You guys are like, yeah, it's pretty accurate. There you go. So we correctly identified the waveform here. This is just a really weak down cycle. Like their lows are just basically non-existent. Yeah, these are your peaks. Good. So we did it right. Hopefully you guys followed along a little bit. All right. So here's something that's important to note, because anytime I do waves, people like kind of, I personally look at it and I think I'm trying to take it literally in my brain. So I'm trying to remember like, okay, you got to remember that like the ups and downs aren't really equivalent. Your ups can be up for a while. That's what maybe the problem with something like this. It looks really equivalent, like ups and downs are the same. Really, a down in most of these cases was like a sharp dip, you know? And some of these don't really happen in a perfect sequence, right? They're kind of like slightly before. You can see a lot of the movement. I mean, what I'm looking at is like a lot of that movement seems to happen here. It kind of makes you wonder if your wave's off, but I don't think it is. This one ends up going all the way through. It just doesn't recover. This is a longer down cycle. You can see like a lot of these waves, it's like somewhere in the middle. This is kind of all part of the down cycle. It doesn't make a new high. This one doesn't make a new high till over here. This doesn't make a new high till like way over here. This is a really long cycle. So you can see that the motion of it isn't exactly perfect. It's generally right that down is happening in that period of time, but technically this has an up thrust here that goes back to the top, even though it was already breaking down, and then it doesn't recover till like almost the next peak. This is a really long down cycle. So these are like really long down cycles. If you want to think about it that way, you can think about it in terms of like, well, how long did it take to get back to the highs? It could be a long period of time, but that's a little misleading, because even though that's true, like that these small cap down cycles take a long time trading down, they seem to take a lot longer trading down than they do moving up, but the price that they're moving up to is very, very high. Like look at the rise versus the run here. Like the rise is considerable, especially like here. This run up is not is the longest one, but it goes really far. So even though the cycles themselves may seem to be a little bit favorable of like downside, that's not really true, because like even in this case back here, like the downward cycle is just like the low here on before the push up. It doesn't even really go anywhere. I mean, just kind of always running up. So anyways, my point being that like some of these are probably a little bit more stacked. This is probably one of the longest down cycles we've ever had, because if you look at coming back to, I mean, it's comparable to 2008 because it took a really long time here on the big picture. It took 2 cycles to get back to all-time highs because it goes from 2007 all the way to 2013. So it's like 1, 2, and then it finally breaks out. This is like that. It looks like it's going to take a while. It's already been a really long cycle. It hasn't broken back above all-time highs again. So again, I say that kind of misleading because the down cycle here, you might think it has to come really low, but that's not actually true. If the up cycle finishes with like the rest of these have, that it's probably not going to finish until June, you know, like it's not going to finish till next summer. This is a lot like what happened in AMC, where January into June was the bigger moves. And I think the same thing applied back here. Like it was June was the major move into January. It's like it doesn't have to be right at this peak, oh, it's going to turn around and drop. That's not really true. And even back here, it went beyond. It went to November, whereas the middle is actually like in June. It's like 6 months later. I mean, 5 months later, whatever. It's like that's a long time. So there's a potential here for sure that this could have continued upside till next summer, which, I mean, it kind of tracks with a lot of the other stuff that we've been talking about, because we talked about how it might go up into maybe September, and then by February 2026, we are really in a down cycle, and that would be like a peak point. We've been using this as a, I mean, it's come up a lot on AMC, but it's very interesting now looking at this from a helicopter perspective. It's like, yeah, that kind of makes sense. A lot of these down cycles begin in this little pocket right here. You can see the down cycle really starts right here. Down cycle is like pretty long-winded here, but it starts like there. This one starts here. So it's almost like halfway through, which again, so it's not a very accurate, perhaps it's not very accurate. It makes sense because this is when it would, market would be turning down, but bulls would still be rallying because it's still bullish, but it's on weakness, and then it just really quickly reverses. This down cycle started really early, but this is 2008. So yeah, and then this down cycle began, and I'm kind of moving this over. This down cycle really began here, also like 2008, became really early. So it's similar. So after 2008, where it began super early, that's over here. And there's like a really long-winded cycle. It comes back up, gets close to the top, doesn't break it, retraces, and then it breaks again. But it takes a long time. This is like secondary motion. I hope that's not what happens on IWM. That would really stink. So that would be like us going back through a whole nother, maybe really long-winded. I don't really know how I could potentially look at that. Nevertheless, you'd still have a lot more time. So I think the upcycle is very likely going to continue at least into spring of next year. It just doesn't look like it would just stop abruptly, is what I'm trying to say. So there's a strong chance that this continues upward. If it can manage to break out, it can continue upward to all-time highs. I'm a little concerned about that because if it doesn't, it could be a whole nother cycle, which is what happened in 2008, which would really stink, where you just never go back above here. And that's a bummer, but if it does break, then my thought is it probably continues to run into middle of next year. And they might try to pitter out, you know, around here you start getting some weakness, something like that. And by the time you get to the middle here where the trajectory is really slipping, you could have had an extended run right into the center. I'm just going to say the average around center to a little bit earlier than center. So the average in this area here. You could have it run all the way up and rally into September. That actually works pretty well. Now, it's not going to come all the way back down here, though, and that's where you just have to monitor and see where it's going to go. Most of the time, I'm sure these retracements are coming back to previous, really look like they're coming back down to check previous levels. It's pretty straightforward. So I would suggest that it come back to 240. And then your down cycle goes through the motions again. But maybe this is not as dramatic. I don't know. So it comes back up pretty early. We'll see. But that down cycle would be, again, like the time of this when it's not making new highs. So something along those lines would make sense. And then this would be the period where it should be making either new highs or trying to advance. And we haven't even hit like advancement yet. We haven't made any new highs yet, but it doesn't have to be long-winded. You can see that some of these other ones are pretty short. From the time it breaks out to the time it gets to a new spot, it moves rapidly. You know, time it breaks out till it gets to the higher high, it's a very fast process. 1 or 2 years at most, you know, it's not that big of a deal. It looks like 1 to 2 years, yeah. So maybe a 2-year cycle would make sense. But I think in this case, it's getting a late start. So it could be a little bit more like what happened 2020 to 2021, which follows what we've seen on AMC. So that there's a similar build out here, maybe into January. Yeah, that would make sense. It looks right. 1, 2, then back down to retest, and then we'll see. That would be maybe the 2-year mark after elections. So 2026, November 2026. Yeah, it follows pretty well. A lull period of uncertainty, like not knowing who's going to be elected in the mid-year cycle or whatever. And then small rallies going into the next election cycle around 2028. It looks like all this is pretty straightforward. There's your next election year cycle. So usually the year going into an election is pretty strong. So it's probably what we're seeing visually. Anyways, that makes sense. It's probably a 4-year election cycle or whatever. Point being is we got the measurement right. We're looking at this in terms of like where would it maybe hit a potential peak. I think there's a challenge in not knowing. Maybe the best way to describe it is like not knowing where that peak might be, but we can use an estimation to get it. It can be very close. So what we could do is take this and drive it over. And again, it's like pretty much right where we put it in March, which makes sense. March would be second quarter ending. So I think the goal, if it's going to run, the goal would be to let it run, into March, and then reposition, probably, and then run it into maybe summer, fourth quarter, maybe third quarter rather. I don't know. Just from a technical point of view, that's what I would imagine. Now we could probably use something like a trend and see if we're way off base here. And we're not. We're looking about right. So good job, Booksy. Yay. You guys think you're an idiot, dude. Well, so the reason I wanted to do that was because I wanted to see if we could maybe estimate where it could potentially peak, and that would give me a better idea of perhaps what's going on here on the big picture for a more of a macro S-curve. That's a harder thing to do because you have to see like a huge amount of data. Like for example, back here in 2008, right? There is a macro S-curve, but it would have been difficult except for maybe the measurement of 50-50 from the bottom, it would have been difficult perhaps to sort of see what that's going to look like. Because you'd have to basically know, all right, we know the retracement value here. This is roughly where the halfway point is. But it doesn't give you like a perfect marker. And then what you have to use, 'cause it's not quite in the middle of where the cluster of trading is, which is a little higher, you might have been better to use like a wider S-curve all the same. And see how easy that is to do, just like shift it over. And it's like, oh, well, that almost looks better. And then even further than that, you could go beyond it and say, oh, there's another one there. You see how this is kind of problematic? But isn't it kind of familiar too? Like it's reminding me a lot of what we're seeing here, where you've got like a small S-curve that kind of looks like it's correct, but then it doesn't seem to be working, like it didn't get there, and it built out into like a wider S-curve. And I'm seeing like the same thing here. Like you've got this very strong comparison that you could make, that there's a sense in which we're seeing an expansion and it almost looks like we're doing something wrong. I don't think we are. I think what we're seeing is it working itself out into like a bigger wave. So it's important to know like where would you expect there to be maybe another high, because that could help you to determine maybe how you draw that S-curve. And all of these would have been valid. I mean, you could have used a number of these to determine where you think you're going to be. This is pretty similar right now to where we are. You've got like one that's really short, and then you've got a second version of that. It's essentially the same thing running into the same high, you know. We're doing that right now. We're looking at an iteration. So I'm trying to like help you guys understand what I'm doing, because I'm thinking on my feet here, trying to determine whether we can actually anticipate where that's going to be. And I think we can, but we're going to have to use a lot of brain power. That's a long time. That's from 2009 to 2014. So you're doing like a 4 to 5 year window. And I don't think it's that long, but it's going to be, yeah. So I think there's a similarity here. We're seeing like this is S-curve 1 and didn't quite meet our expectations, right? And maybe what we're doing is a little off. There's S-curve 2 here. It's like wider. But I think that's probably building out to a much larger move. I hope that you're following me with that. So perhaps it's that simple. You're building out to a sizable move. And we have an idea of where that might be. Maybe in this region over here somewhere. It's a difficult one because it's not, again, it's not like super clear. And then there's a huge potential S-curve here. I don't even want to really get into that, but that's like a giant M, whether you go down versus coming up, holding, and then breaking out. So what I want to do is, at least for now, I want to kind of assume that what we're seeing on this red marker is indeed, this guy, is indeed like the major middle or close to it. And therefore, I think our estimation of like 270s is probably close to right. I don't think it has to be perfect. I think it just has to be close enough, because we're not going to get it perfect. But I think we're right. I think this is like a major S-curve, and it's probable that this is like making up a M1. So this is all M1, M2, but then we're doing like another one. So we're moving across. This is actually like a middle. It looks like it up high when you're like helicopter view, 10,000 feet. You can visually see it better here. This almost looks like the center. So this is like an M1 over here. This is like a center cross, and then this is like an M2 over here. That may be a little confusing, I know, because you were saying a minute ago, Booksy, these are iterative. Yeah. But look at the volume on this middle. See how low it got right here? I think that's important because I believe that represents like the center of, it's right before it jumps the creek. And that's really what I like to measure when I measure M's, is where the creek jump is. So I think that's actually the center of, probably the center of the S-curve. That low liquidity right here, more than likely, is the center right before it jumps and tries again. So one jump, and then we can have some fun with measuring out. So we were estimating, I don't know why I put 273. This doesn't look like 273 on this chart. It looks like lower. It looks really close to there. So it looks like the two smaller S-curves are pointing to like a larger S-curve top. I think we're right here at 270, 268, 270. And then we just have to determine the timing of it. So now that I know that, and I'm kind of looking at the big picture, and I have the bigger waves, and I know where we have an estimation that it's over here, and now it looks like it's lining up, because that would be about 50-50. That's March. That's Q2. So we're right. We're right on it. It's correct. That's right about where we estimated that high would be. That was really close, guys. Really, really close. So what I'm going to do is I'm going to take a step back. We already got localized potential drop targets. So that's done. We did the local stuff first. That's over here. Now we want to do like the big picture. So it can't be this marker because this one is expired. It's not bad. It is, I think, a good match for the advancement back to the value that it hit. We did the measurement. It's absolutely like 100% correct when we look at that. It's almost embarrassingly correct that it came right back to that same 230, roughly 230 value or whatever it was. Perfect other side of the wave. But then we did another measurement to see if we could determine where the center of the sine wave was. We found that. This is longer winded. It looks like the center of the sine wave is coming up really soon as well. So this could indicate like the middle cross, possibly, if it's 1-to-1. We don't know it's going to be 1-to-1, but it could be. So I don't know why we wouldn't look at it. So this is a 1-to-1 across the middle, and so it would indicate it's like right now, which also makes sense because of elections. Yeah, it's I did not do that on purpose, but it really is like, yeah, it's basically this week. So you guys are like, well, that's cool. What does that mean, Booksy? It just means that the middle of the M shape over here would line up to the middle of the M shape over here. So in theory, if it's going to cross up, we would be in like the center of the M shape on this top. We'd be like halfway through. Here's why this makes perfect sense, because then look at the measurement here. This is kind of amazing to me now that we're just sitting here staring at it. Look at the measurement here when it jumped the creek. Check that out. It's basically like a perfect swing. I'm going to put it right on that creek jump marker on the weekly. Now look at where the quarter is here when you look at 1/2 of that. So if we were looking at this as an M shape, we would be looking at, this is the move, like the markup phase right here, right? So you would take something similar to that, if I'm doing an S curve that wraps around, and you would drop this on the other side, and then you would take that distance and you would split it in half. And that would give you like an approximation of where that middle would be. Good Lord. How perfect is that? And it's like right where it needs to be. And that is great because that means that, again, everything kind of clicks into place. So that's like the perfect 50-50. See that? Whoo! Spicy TA. That's good stuff, man. That's good stuff. Oh, man. Look at that. So we're right in the middle. That's exactly where the middle is supposed to be on the M, which means nothing. You guys are like, means nothing. What do you mean means nothing? It means that the setup, I know it sounds a little weird, but it basically means that this setup doesn't need to take off till January 21st. Now that's going to at first kind of frustrate you, but, and this is important, remember 2020. And remember what happened in 2020 was that during that markup phase, when we went into January 20th, you guys are like, January 20th? Yeah. What happened on January 20th in 2021 was that AMC skyrocketed. Why does that matter? Because during this time period, in the November election period, we actually went up and then back down. And it's interesting because there's been a lot of people who've said like they don't think we're going to go back low again. And I've already made a case for that. I talked about it yesterday. Because of this big picture, it's like, yeah, I could definitely come back down. It doesn't even have to come very high here, come back down. And I'm going to argue that it will go up and then slide really far back down. But look at where I've got it coming back down to, roughly January 20th. I mean, I didn't do that on accident. I did it on purpose because that's where the intersection is of that marker. So they already established a wave that intersects right here on January 20th. It's starting to set up in a very, very, very similar way. Now, it doesn't have to go that low. It could be an LPS. It could be some other thing that stays up high. It doesn't have to be this low. But my point was that it's absolutely setting up very similarly to that original run-up that we've all talked about for years. And it's doing it into that January 21st. This is 100% adding credence to that, guys. Like, you can't make this crap up. It would be very difficult to do what I did and forge it. I hope you know that because it's almost impossible. Like, I can't do that. All I did was measure what's already there. So what we have is we have a potential massive S-curve building out that should go up to like the 260s, 270s at least. All right. Now, it's not as high as I drew it over here. And you might be thinking, well, that means it's wrong, right? Well, I don't know because we don't know how long it may go up afterwards. Some of these cycles are very, very long-winded. Like they have extreme gains. If you guys are like, oh no, you quoted somebody else. They're extreme though. And then others are not. Like they might make halfway points and stop and they don't continue advancing. So it's not like, oh, it hits that point, it's going to stop. It doesn't necessarily have to be that way. We're hypothesizing based on what's happened in the past. We can't be 100% sure of what happens in the future. That's not a thing. In TA, it's not a thing either. All I can say is that right now is that 100% measures out perfectly that this is a 50-50. Beyond that point, we just don't know when the distribution or when the selling really starts. We have ideas. It could be around middle of this S-curve or middle of this sine wave here. That's about as good as we can make it in terms of like maybe it stops advancing here. But in terms of like advancement, all we're really talking about, if we think about it, is when does it break above the highs? So what that would tell me is that if you go back to roughly that 2045 area, I've had 2050 on the chart for a little while as a target, but just look at the previous highs here. There's 2045, and then there's also this level around 2034. 235, and then 244. Why was I saying 20? I think I'm just used to saying dates. This would be an estimation of when you actually advance and mark up. So the idea there is that you would probably work yourself out upward. So what's not being shown here is is the movement itself as a manner of push out, and like you can't really see that. So it's a little confusing because it's like, well, all you're seeing is, you know, this M-shaped stuff. It doesn't look like it would go anywhere but sideways or down. You're saying that could it possibly go down? Yeah, I mean, it could go, frankly, at this point, if this is the M on the other side, it could go all the way back down here. I don't think it will go back beneath like 211 because, again, I like to measure the S-curve based on the markup and then the chop. I think the markup has to be no lower than 211, and it doesn't really make sense if it isn't. But it also can be choppy, like, and it technically could have already started since this is like the middle. there's no rule that says it has to do this all at once at the end. Like if you look how close it is, it's a very small window. There's not that much distance that's actually traveled in the center of that markup. So it's like a way of boxing it out that, in my opinion, is just really simple, straightforward. So you've got a rejection level here that it may seem a little bit arbitrary because you're like, well, I don't know what to make of it, but we know already because we already know that like when you advance on the M cross, you can go up or you can go down, and we've seen it. If it goes up here, this is the advancement on that M. It could be way up here, frankly, in no time. And we also have a very similar move here on this push out. So it's a hard thing to say. Like there could be a very large, substantial push. It could die for a while and stay sideways and then push out at the end. But what we do have is we have targets in these boxes. And I think that I don't want to get like way more complicated than I already have. I feel like I've already kind of drawn this out for a while, and I'm really just measuring time here, but we could also measure like distance traveled. We can look at this as a proportion of the whole and whether we think this is a good indication of price trajectory and stuff. There was a smaller S-curve here you could look at. You could look at another one. We just did that a few minutes ago. You know, there's all kinds of stuff that we could do to do our best to kind of estimate where it might go on these layers. I would suggest to you that probably it's going to be fairly simple because like here, this goes up to like the 50, it's building out along that 50% mark, right? So I kind of marked off this whole little area and boxed it off. But notice that like it doesn't advance past that 50% until it crosses like the Big Creek. But the distance traveled is actually pretty straightforward. It basically goes to that 50% mark from the bottom, and then it pushes up like equal parts on the other side. Why is that straightforward? Because you could do very much the same thing over here. So you're saying it's going to sit there until January, Booksy. Well, in theory, it could. I think that what it means is that you don't necessarily break the highs, the all-time highs until then. It could be very simple in terms of like how it advances with an M1, M2, and then pushing up. So you could have a big run up here right now and then drop back down and then advance again back to the top. Like that works. So it's not it's not like a one-size-fits-all shoe where, I mean, it is a one-size-fits-all shoe in some ways because of the box, but it's like, all I'm really saying in the end is that you're looking at where is it measuring out to its kind of 50% marker, which is roughly 219 down to 197. That might also be part of the reason why they dropped it so low. And weird as it sounds, but that slingshot mentality is a real thing. So if we're looking at that, it's like, man, this could be at a high in December for like a Santa rally and then do a retracement. Like this could very easily push out. It might come down first, you know, like we were talking about locally. We talked about the local stuff, 219, 220 or something like that. Then push out, build a top here, and then advance to December, basically Christmas. And then after Christmas, you drop, and this could be where it comes back down to retest, you know, major markers. And that's it, you know. I don't know, like it's that simple, and then you could just advance again. It's really not, like again, one size fits all. It has to be this way or that way. So when I look at the, guys, is it a one size fits all or is it not a one size fits all? Just make up your freaking mind, man. I guess in the end, we don't have this S-curve yet, but I think it's right here, is what I'm trying to say. So I think that small caps are being very timid for whatever reason in their advancement, and it might be kind of long-winded, but you also have to remember that AMC and GME did not move the way the market moved back here when they started advancing. When it got to the point here where that November moves were starting to happen, AMC was had nosedived already. It was going down. So by the time this was reaching back up and trying to break out on an S curve, it was basically at the midpoint of an S curve. Hint, hint, nudge, nudge. This is the same area right here that AMC did not make that cross up, and instead it didn't cross up, but it crossed down and went low, which has already kind of happened for us. So I think the S curve at this point, it's anybody's guess, but I think it could very much be that it doesn't really ever come really far down again, and you end up with a pretty straightforward build out here, and you get a run maybe in January, but this did have a run up in January, but it wasn't that crazy. Yeah, so this was like the run up in January right here, last minute, and then maybe at that point AMC and GME are kind of playing catch up. I bet you within a couple months, like a month or so, not a couple, I bet you within about a month or so, we're going to start seeing a symmetry appear on this bigger S curve. I would put money on that. So I think by next year, based on this measurement, that I'm fairly confident that we did it right. Everything clicked really well. I think this is the middle of the current cat ear wave. I think we've got a double move 1-2, and then we're going to get another 1-2. I think that it's going to finish an S curve locally. That's quite a bit bigger than maybe what was expected. I think it's going to be going into Santa rally kind of time. Maybe that's common sense, but I think it's important to note it. And then I'm thinking at that point, 1, 2, 1. I think we're going to wait a little bit more. It may not be as severe as what happened down here, but we may have a little bit of a dip just to come back and check a creek level, and then we're probably just going to finish the advancement going into January. But I want to say that around January 20th, much like in 2020, when you go back and you look at where January is in 2020 on IWM, it's already like really high. It's making like its final legs up into a range. So it would make sense. I don't know about the rest of this. Like, why would it be that long? I'm not sure. Maybe it's only ever going to come up that high right now. Maybe it's not going to make a significantly new high. But we've already talked about that, and I already kind of mentioned it a couple times. There's not really any particular rule about those. Some of them, this like back here, just kind of ignores the down. Most of them seem to go back and retest. If it's already on the top, it's not really going to have to go back very far. So this could be one of those situations where, yeah, it comes down into 2026, but maybe it never goes significantly low, you know? And again, like this could form out an even larger, sounds crazy, but it really could. This could form out an even larger S curve here. And that's how you get back up by 2028. And that's a full market recovery back to the market trend. A lot of people doubt this kind of stuff is going to happen because they think that the market needs to crash. But if the market's bullish and we're rallying and all that junk and the economy stays healthy and there's no like major catalyst, you already know what I'm talking about. If there's nothing crazy that happens, I don't think it's a unreasonable thing at all to suggest that we could be at 400 or something like that on IWM. The same kind of stuff could have been said back here in 2008 after we spent years in the downside. This is a really long 24-month period, and we still haven't made another high. So this is a 3-year period of no highs for IWM. So the idea of having like a massive rally, kind of like we did in 2008 after a huge correction, I don't know, man. I think it's definitely possible. We'll see. We'll see. I don't know if it's going to be that black and white, but it looks right to me. I don't know. That's just me. Maybe that's a bias, but I think if it's camped above here, it doesn't really have to go very far to make corrections. So it could be a couple years of like lull. I mean, this is a really boring time. Maybe there's a heavy amount of trading that happens from 2025, 2026 into 2026. It could be like a year-long sideways kind of range here. But that's good. That gives you a proper precedence for more upside. So I think it's part of a market-wide correction, I guess is what I'm trying to say. Yeah, and that's about a 50-50 grab too. Yep, back to the other top. So I'm going to say that's pretty likely. All right. So the reason that we would look at all that is to make really to make grand sweeping assumptions. I mean, in some ways, but also to look at possibility. If these levels hold here, then we have a decent sense of timing from now through the end of the year. And I really think going into March, we could be seeing a rally. It makes perfect sense to me because small caps benefit greatly from more liquidity in the market and from the rate cuts. We could go out and map all the rate cuts too, I guess, where those are supposed to be. They probably line up with some of these peaks and valleys, but I'm not going to do that right now. I wanted to see if it was making logical sense that we're doing iterative motions upward. It is. I think we've got a pretty good sense of where we come back to as a result. But then on the big picture, I think that we're developing a much larger wave up to about the all-time high. And I think we'll hit the all-time highs before January, but we probably won't break them. Like, we'll probably sell off and then have to regain our footing. And this does, to some degree, fall into line with what we've been thinking about for AMC and GME. I like that we're at 424 right now. That's good. But we had thought we might rally potentially into near the end of the year and start selling down. If it's kind of inverted, it changes things. But it's pretty similar. I don't know. This is messed up. It's on a weekly chart. It doesn't look quite right. Yeah, I just screwed it up. This is a really simplistic way of looking at it, but that there could be a rally. This is a little too soon, but there could be a rally into November and then come back down into January. It's very similar to what we were thinking. Santa rally, drop into New Year. Rally, drop into the new year. And again, AMC back in 2020, it was very similar. IWM did the cross up, pushed up high. AMC did not, and then it ended up going low. It's a very similar style setup. I wonder if we're going to not do any of this low business after all, or if this is just a midday rally. I don't know. If it holds, it holds, you know? Like, there's no... there's a low target here for Friday if it doesn't hold. But if it holds, it should just advance. So you guys watch 424 today. Definitely a big deal. I'm pretty sure we've already gone through this. And like we talked about, if it went up early... I think we did this earlier in the stream. That if it went up early, it would jump this creek. I drew it out, and it would just advance. I spent a lot more time talking about downside as a possibility based on what was happening on GME. This is a possibility. Beware the double top, though. You know, beware it trying. We may have overestimated this. We may have thought this was the double top, and it's really like the bottom before the double top. So just be careful. That happens sometimes. You guys are like, what? Well, so sometimes that first creek jump looks like that's the double top, and it's really just like an auto reaction. And then you find a base and you try again. This could actually be the double top. So just be careful. Like, I'm just going to draw it like that because I think it's possible. If it holds, it could go right above and head up to 450s. If it doesn't hold here, it's specifically comes above 424 or right at 424 and rejects and comes back below 421, I think it's likely going to start bleeding down through 414. And that could be a action at the end of the day into tomorrow. So we will see. I'd love for it to cross up. It did jump here. It kind of came back and checked the creek already. So if it can hold it, it would be nice. We could see that advancement on the 1-2. It should hold here and push. If we don't, it's, in my opinion, definitely going to come down to 4 Friday. So, or at least 415 or something like that. 411, excuse me. This area. Yep. CHRO is a nice setup. Could you check it out? Looking for a nice move up. Curious how you see it. I see weird things, so. Yeah, this was fun. We got a new IWM chart. I kind of like it because even though like I've been doing all kinds of stuff on here, sometimes you keep trying to make use of old lines that aren't really being used right now. So I think it was good for us to like reset it. I'm curious if, you know, in the future, if it matters that I did that, but I guess we'll find out. I like the idea of kind of resetting the chart every now and then and just kind of refreshing it because, again, sometimes you get kind of married to your old TA. And it may be kind of right, but it may be kind of wrong as the chart evolves and changes. You see more big picture stuff. I don't know what CHRO is. Chromacell Therapeutics. Why are you so into like weird therapeutics and stuff? Are you on like StockTwits or something? You're like, what? I don't know, man. I don't know where people get these kind of things from. That's what I'm asking. Well, these are distributive, so they're pumping it up to sell it back off on this level. And that's a high volume pump and high volume sell, and it pushed to new lows, and then a high volume pump, high volume sell. So this is a really young chart, or what am I looking at here? Looks like a really young chart. Is this like a new IPO or something? I've never heard of it, and it doesn't look like it has a lot. Yeah, it looks like it just started February of this year. I don't know. We'll see. I said it earlier, if it closes above here, this is negated. So I didn't mince my words. I just said that like you have to be careful about it dropping back beneath again. It's the same thing as AMC right now. It's doing that pump up, but it doesn't mean it's going anywhere. And like AMC it made an advancement over the creek, but it didn't make an advancement over the top. GME made a gap fill, so just went ahead and got rid of the gap, which I said was good because if it comes back up, it's above the creek, but it has to hold. You can't, otherwise it's just a head and shoulder, right? You see the shoulder on the left, the shoulder on the right. Weaker volume, RSI is coming down. It's a very dangerous position to be in. You need to see it really hold, meaning buyers have to step in and hold it. Otherwise, it's very likely going to just slide right back through, and it's just a gap fill. It sounds complicated. It's really not. It's very simple. I think personally, like it looks to me like this is a weakness. It didn't even hold this trend. It just kind of saddled through. I would not be surprised if it came back through it. If it went above, I would be kind of pleasantly surprised if, you know, bulls hold it along this ice here, this rising trend. And then, yeah, you've got a potential, maybe. But right now it just looks like up thrust, sell off, up thrust, sell off, and then they're trying to do it again. So we'll see. It's just not like a lot of hopium to be had here. Both of them are in very similar situations. Sure, like could this break out and push up? Yeah. In which case you're out of the major creek finally, or at least to some degree, although this one's quite high now. For AMC, it certainly would seem that way, right? Go right back up. But if it comes down, there's plenty of natural resting places low. So it's not a... It's not really complicated. This present price action is probably designed to get people excited, and it may very well be a bear trap, may very well be a bull trap. I just don't trust that kind of movement on a Thursday going into a Friday when you've got a pretty clear path down. Yeah, you've got a bit of a path that you could take up if this ends up being a rising triangle, but so far it's been a mixed bag. It doesn't look particularly strong. It doesn't look particularly weak. This looks like a weakness to me on GME right here, and then the fact that it's got kind of a repeated 1, 2, 3 push-ups. I don't know, man. That's not really showing a lot of strength. It's just showing it kind of getting beat down. So it needs to push above 2180. This is just confirmation 101. And confirmation in this case would be pushing up above like 2175 and holding that level. That's the breakout. There is no breakout right here. It's just re-entered the wedge. It's on the other side of the creek, which is good. I have a question about whether or not this has checked it or not. The volume's weird. It kind of slid across it and pushed up away from it and just filled the gap. So we'd want to see like continuation in volume. You'd want to see it push up, recover. You know, hold the support here and then continue. And AMC is the same place. It needs to push up, pull back down, hold the support at 426. If it pushes up and it drops back through and slides through the creek, it's going to go low. And the same thing goes for GME. It's going to, if it does that and it slides back through here, it's going to drop, you know, considerably. I'm happy to say it didn't go down to like this intersection, which is great. But I think that that's just a matter of like how you view that on the whole. And I said it earlier, I don't think this is necessarily a timing target. It could be that this is a timing window. So we may be getting an M cross that's crossing up for once, which is great because this was the timing window for the M to finish right here. But we don't know yet, you know, it's not over. If it drops back through, it can happen within this timing window, and then you still have a massive drop. That's kind of outside of the M. And then this is still just like a target that was found. It's not like it disappears or something. It's a target that's being used. It's generated. I just found it. I trust that it's a target being generated by bears. I don't necessarily think, or by the market on the whole. And my bet is if you looked at like a level 2 or something, usually what happens is if you got this right, if you go look at like those walls of like buying and selling, there's probably a lot of people who have like orders down here. You know, like a lot of that kind of stuff is derived from what most people don't think is real, but it's like supply and demand. It's like the demand is maybe here at this point while supply is taking it down there, whatever. That kind of stuff typically is built along the floors, as you guys know. So you'd have these levels of buying levels essentially, but an M cross can go up, an M cross can go down. So very possible that this is crossed up. It's also very possible that we're getting like kind of a fake out, and we're going to find out really soon. So I don't want to be reactionary. That's why we talked about it earlier in the day. Like, we just had to know what to look for. So you just got to know what to look for. I'm looking at RSI to kind of help me here because it's like, well, I can see a bit of a trend here. It seems like it's trying to recapture it, and that would be very bullish. If after the M you come low and there's no buyers, you could buy back up and just recapture that and then continue, and that's the bullish outcome. But there's what we call the hook, and the hook is like oh, you've been rising this way, but then you drop, and then you come back to check it, and then it goes down. And that's like a supply check. It's an inversion of like a support when you go back to check for support. It's kind of the opposite. So I'm a bit curious if that's what we're seeing. It's really more like there. I don't know. You just got to be mindful, like, possibilities. If it crosses up, guys, it crosses up. We don't have to worry about this. We can cross this out as a likelihood. It just has to come up here. It just has to. There's not a scenario where it doesn't confirm here before it continues, and that's where you'd look at, okay, that support's built, we can continue. Even if it went all the way up to the top to like 2180 or something, even if it pushed out of here, it could still be an up thrust if it drops back through here and then comes back low. And then you're just looking at this like a widening, like a funnel, right? You see that? And you're back to square one. So I don't want it to be like, it's not black and white, but there's a very simple way of looking at it. It's like, yeah, I could see why you might bring it up here and distribute again. They've done it, I don't know, 4 times now. If you want to take it back up to try to sell off and get sellers, it might work at that level. It seems to be favorable for somebody. They like that as the ceiling right now. So it has got to hold that support. Nothing else will be enough for me. And if it does, probably, I don't know for sure. I think it's a basic measurement of the width here. So I think you could just say it'll probably extend up to 2250. And that could be one of those things where we chill out at 22 or something Friday. We're just higher up, right? Automatically converts at 792. Yeah. Uh, 130 to 225 potential. I mean, it kind of looks a lot like what we were just looking at on the other one. He's like bouncing outward. To me, it screams of like range. So this is a potential center mark on the range. And there's a drop here you could use to measure as well from this hook down. Yeah, maybe 130. It seems like that's maybe where it goes back to, but it didn't make a lot of movement downward, so it's trying to kind of, it's almost like the shift wasn't very large. Sometimes that shift is really quite substantial. The thing is someone keeps selling it, or whoever it is, a lot of the market apparently, because there's a huge amount of volume here, keeps selling it right above $1. So clearly, like, the bears involved in this trade don't particularly see it warranting being above $1 right now. And then I would look at the larger reaction possible, even though this would be difficult to measure. So 130 up to 160. That's kind of the target range for a swing. If you happen to buy low and it eventually got to that target, you'd probably make a lot of money. The issue is that you really don't, just like we were talking about with WTO, it's like, yeah, that's a 200% move. It looks like a really good swing. The issue is you don't really know if the stock's going to drive itself into the ground first. And some of these guys that are brand new, they just sell off like forever. You know, it reminds me of like Ape, when Ape started. It did this kind of nonsense, and eventually it got down low enough to like 80 cents, and it ripped back to like $2, you know? I mean, it basically was like the same thing. It went down to like 60 cents and then it ran up to like 2, you know? And that happens, but I don't know, it's tricky. This is already like super overbought. A little bit better here. Yeah, I mean, it kind of looks like a mirroring, like a widening here, and then maybe a going back outward. So in terms of a swing, is it a safe swing? Probably not the safest, but is it a very strong possibility? Yeah, it's a decent possibility. If it can hold here, I think it can manage to have a pretty substantial move out. None of these things have to be symmetrical, but it looks like maybe early November. I'm just looking at the shape of this move here. But just like WTO, it's like that happens, but it could be happening on like a downward trend. So you got to be careful. I think it's out. So if it holds above 75 cents and it starts advancing, if it pushes above $1 and holds, that's probably a better trade, even though it's not very far. I would think that's a better trade. So basically what you're doing here is you're trading a channel break. Yeah. So it might be unfortunate because it doesn't look like the best time to enter, but really like $1 here would be like the breakout and the entry. Makes sense. And then you can maybe ride that up to $1.60 or something. It's not 200%, but it's a 60% move. It's a big move. That's about as far as I would take that. So, all right, guys, it's lunchtime for me. I gotta get out of here. I do want to talk about MPW really quick. It's not everybody's favorite stock. Kind of always save it for last. I was kind of hard on it yesterday, just kind of down on it, and I was thinking about how a lot of times the news that comes with a stock comes in a way that is designed to give you like a rise or to give you like a bad feeling. And I got a bad feeling lately, and then I started thinking about how that doesn't really make sense, because even though they've been kind of under scrutiny and the director that sold the shares was, I don't know what he was doing. They actually just published a report about quote unquote wrongdoing, and they were found to be pretty much blameless. So there was a lot of litigation or something about them mishandling funds or something, and all that stuff was recently made public, and it was good. And so I was thinking about that, and then I was thinking about the tenant problems, and I was like, really all they got to do is show up strong at earnings. And if they can show up strong at earnings and convince people about, and with good data, convince folks about the surety of moving forward, this is probably like one of those moments where the news may actually be working against bulls, but in the favor of longer institutional bulls. I don't want to be like, oh, it's a bluff and double bluff kind of thing, but that's sort of what it feels like. I was thinking about it later, and I was like, did I buy into the negative news because I saw the red in the negative news? And they don't usually go that hand in hand. So it made me think about it a lot, and I'm like, really, this is just going back to touch the floor again, and it is sort of a creek break because of the bigger picture. That's what really bothered me, and everything else about it isn't really that big of a deal. Like the higher high here did bug me. The fact that it could go into like a spring bugged me. made me wonder if it's going to go down into January and do a low spring here. I think it's a possibility. But then I was just like, I need to just kind of go back and rechart this. It may not look that simple, but that's the creek line right there. That's the trend line. So it had that breakout. This is why I thought it was going to go up, come back down, and then push up again in October, because it's set up to do that kind of 50-50 wrap and have a really big rally. And instead it did a throwback. And it kind of reminds me of what we talked about on IWM. We were just looking at it. And there was a similar motion on IWM based on the news where frankly, very similar, where you have hey, it came out of a bottom finally, and it has this big push out, and you're getting ready to go. And then all of a sudden there's like this major sell-off, and you're like, well, what the heck happened? Right? And it's like, well, the news wasn't good. Okay, but was that really the whole story? Well, obviously it's not the whole story, because we're right back to where we were when the sell-off happened. It took some time, but it just built out again and went back up. It's sort of like somebody got caught with their pants down, and not to be crude about it, but it's like that's kind of what it seemed like. It's like there was someone in there who just got screwed because they were heavily short, and they took it back down on bad news that was really irrelevant, that was going to correct itself in a couple of months. And I hate to say that they're exactly the same. That would be a little silly, because it kind of makes it seem like, oh, it's going to come, it's going to do the same thing. But it feels very similar, where like there's this motion to break out, and it does break out, and then it just kind of comes right back down to where it was. It seems like it comes a little too low. And part of me wonders if somebody got screwed here, and then they took it back down, they're going to use that opportunity to change your positions. So I may have jumped the gun a little bit. I need to be a little more patient, because I think that I may have jumped the gun a little bit on that IWM, feeling like, or the MPW, feeling like that director guy selling his shares was not great. But in the end, if big picture, if the problems are being solved, and big picture it's worth like $12 a share, and it really could be very viably that much, then it's like, what the heck are you worried about? There shouldn't be any worry about bad news. It was an excuse to sell it back down, and that's exactly what happened here on IWM. They used it as an excuse to sell it back down and pass back through those gaps that were good news gaps, and then you build back out along that support and leave. And it's clear that they wanted to trade that gap on IWM. We sat sideways there for like a week or so in August, and then we ended up even then coming back down, for more shares. Like constant back and forth to that level where that gap is. And part of me wonders if that's something that happened here, and somebody, again, wasn't prepared for that move. Wanted to get out of their short positions, and it went too fast, and they brought it back down. Meanwhile, we got a push of resistance at the top, just slightly higher. It came back down. It looks kind of ugly because of that. Doesn't look friendly. Feels like a distribution because of that, because you're like, well, crap, it's not advancing. But there's so many shorts in this play that it just kind of makes me wonder if, again, maybe that news is counter what I thought it was, sort of counterintuitive, just like what happened with IWM, which is like, oh, it went down on this bad news, and it was really fine, and then it recovered pretty quick back to the upside. In the grand scheme of things, it was pretty fast. So we'll see. I'm going to watch this closely. I'm not out of the play. I wasn't particularly happy to see it come that low. I wanted to see it hold here and stay above. But at the end of the day, you're not in control of price action. All you could do is kind of watch and wait. And I think if this is like the last resort, and this comes back positive supposedly this week, although last time it was delayed like 10 times, we'll see what they say, in their earnings report. I think it's possible this is fine, And we did talk about the nature of the waveform here, the nature of the waveform was that this jumped up and could come back. And I originally thought it wouldn't go back down below the gap because I thought it could get back down there without breaking the creek. And it kind of did, and then it came back up. But there was a lower test here, and that is like the middle, right? So if you're looking at the overall kind of center, it's really like right there. That would be like the middle of the move, right? Right here. So in some ways, like, I was like, yeah, this doesn't look good. And then in other ways, I'm kind of like, you know, maybe it's not. It is a throwback, but maybe it's sort of similar to what happened on IWM. They're using that throwback as an opportunity to trade below that creek again. And once they push out, just like we did here, it's kind of done. You know, done what it needs to do. It just seems really similar. We will see, right? We will see. And then beyond that, in terms of like where it goes next, I think there's a number of possibility, but I want to say that talked a little bit about this previously, but the waves, the way that they typically work is that the wave matches roughly the inside trajectory. So it's this trajectory of the fall. And it makes sense if you think about the distance the wave travels down and then building back out, it's roughly the same. I don't use the rise because the rise can come from anywhere. It could actually fall in, you know, but that original kind of wave makes sense down and then back up. So where the build out and breakout is, you'd have a similar move. So that would mean that potentially that the down on the larger wave here, which is the bigger dip, that if this is the low, you got to think about it in like bigger terms. And this is what I wasn't doing yesterday. So this is like the big wave one. This would be all low. Like this would be all the low wave. Does that make sense? So that means that the next wave should be, that exit trajectory should be like the big wave one. And this is why you got to like kind of pay attention to the, as much as you can, to like the big picture. This is definitely a possibility that it matches very similarly to what we see on the larger wave, because this is up, down, and then up again. So putting it like more of an S-curve term, it's like this, right? This is upside, this is downside, and then it's up again. Could even be that large. I did this a long time ago on the master fractal that I used to use, and I use it sometimes as like a learning tool, a teaching tool, I guess, because I think it's a really useful one. But one of the things that I noted was that this is right, like it usually checks that first. And then one of the things is that when it builds out, usually this wave has like a cross trend to the upside, because when we do that analysis quite a bit on this channel, again, good learning opportunity, even if you're not interested in the stock. If you don't remember, and most of you guys that are here probably know what I'm going to say, but that cross trend that happens, that goes to the highs and the lows, that happens like both ways. So that means that there's typically something in here, though it's not always perfectly evident. It's oftentimes here, and then on the build out going up here, that point towards the future top. And then for lack of a better word, they're intercepted by bears and the price is driven back down. And then there's a correction back to that top later. So what you can do with that is you can use those upward trajectories, just like we did with the S-curves on IWM, to estimate maybe where that goes. So if this is a valley, and I think it is, if this is a valley between two larger peaks, then you would use this as a way of measuring out where those peaks could go. And so you would use this trajectory here, which already was hit. So you're like, well, it's already hit, man. Like, what is it gonna do? Like, hit it again? It might be that simple. I genuinely think that sometimes we do overcomplicate it. And one of the things that I'm interested in knowing is, again, like, hey, if it's the wave's about the same, and this builds out and it breaks up higher, where does this intercept the top? And it intercepts it pretty darn close to some of these other dates that we talked about up in the $6 to $8 region. Some of you are going to look at that and say, grasping at straws, I see, Booksy. I don't think so. I think that just like earnings back here just rocketed the stock, I think you might actually get something really similar. And the fact that this looks like a widening does not bother me at all, because the master fractal also looks like a widening on that one side. And that's what's kind of crazy about this, is like I started looking at it like, well, you know, is it really bad because of all this news and so on and so forth? But you remember, like, this is essentially like the exact same bottom right here. Do you guys visually see that? Like, it's super clean. I don't want to be like tooting my own horn here and saying that like this is somehow magically like 1-to-1 or something, but this is like really, 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 really clean. And you guys are like, yeah, but you've used it before and it doesn't work all the time. No, it doesn't work all the time, but it works a lot. And I'm telling you guys, I think that this setup right here, it may not look like the same thing, but notice like where the drop-off is and where the drop-off is here. And notice that like when it goes back down in this area, it goes back and tries to like test that range. This doesn't end up going really low, but like here in this Mark 6 area, this build out, this is the M cross, 1, 2, and then it's low, 1, 2, and then it's bigger, 1, 2. It's kind of ugly, right? And then it breaks out. And that's, I think, what we're experiencing right now. Even though this came higher and you're like, well, it came higher, it can't be this or that or whatever. Well, I don't know. You know, part of me thought maybe it is like this and it's already come down and it's going to be like horrible or whatever. It almost doesn't really matter because the end result would be the same from an iteration standpoint. Like you would have this as like either the final you know, where maybe it goes sideways for a while, that's possible, but it'd still end up being like a huge push. But if it's in the middle, and I think it is, this is where I'm getting to the point here. This is a widening going up. So once it starts that widening pattern, it doesn't really ever finish it until way later. It does try to break down here at a later time, but it basically like builds out, and it's a way of kind of shaking out on this waveform. I'm not 100% convinced that I'm right about this, because I think it's possible that this is indeed the peak. Like this is peak 1, this is peak 2. Maybe we've already made it. But part of me thinks that it's very possible that I'm a little off and that we haven't actually made the peak yet. And so for what I was thinking earlier was like, oh, it can't be the peak because this position came too high. But I don't know, man. See, this comes back really low. It checks that bottom floor. It pushes high into the range, right? It advanced back to this top portion, you know, at least. We kind of did that here. We kind of didn't. It's complicated. And I guess what I'm saying is I shouldn't have closed that door so quickly, because each of these does reach and hit that peak. Like they all hit the peak on the widening. So the nature of the build out is one that is widening, and that's what's happening here. And it continues to do that as it builds its way out. And so if you look at the, I guess if I looked at this like last week, I probably would have thought maybe this already happened or something. But I already was thinking like this was the move up, and then the smaller move and the move up would matching this side, which would be like a bottoming action. So this would be like the barrel, the lows, not the highs. And then this would have to be the creek jump, right? And again, maybe it already happened. Maybe that's already happened. You can kind of see it both ways. You can see the advancement is potentially being done already. I don't want to overcomplicate this either, but the point is like this is very similar in terms of wave structure to what we're seeing here, and I think it's too small. I just do. it feels wrong. It doesn't feel right to me. It feels like it's kind of off in terms of how high it goes and all that stuff. I wish there was a better way to determine where that top was, aside from just using like trajectory intersections, but that's typically the way I've done it because the waves build out pretty well that way. They do a good job, so you can usually see it. And in this case, it's a meh kind of thing. Like I'm not really 100% positive. There's also, you know, we could talk about that, but there's also the nature of parallels and junk all throughout here. Big picture wise, once this finds its support and kind of manages to get above, it's just a normal M cross, 1, 2. If it holds, it does fine. So it begins here and it ends over here somewhere, or it ends over here somewhere. I'm not sure. Maybe there was a desire to not take it up for that reason. Maybe it's one of those things where, yeah, you're right, Booksy, but it's ultimately going to do this thing into January, and then it takes off in January on the 20th or something. Maybe you were kind of right, but kind of wrong, you know, and it is going to break out, but it hasn't made the right moves yet. I want to work on this more, and I want to come back when I have a better idea. I'm not going to do it right now, but I just want to let you guys know, because some people probably heard what I said and were like, well, that sucks. And I agree, it does kind of suck, but it's not impossible that this hasn't actually been met yet, is I guess what I'm trying to say. It doesn't feel quite right to me. It could be wrong, but it just doesn't seem like it really pushed. I don't know. I'm not really sure. If it is already the move, and it did technically make a new high by like 1 penny, if it already happened, and this is not the middle, I'd be kind of confused because the timing of it is really wonky. It doesn't really make sense. This times out more like the middle. Another thing I want to mention before I finish is that sometimes that middle is weird. You remember on AMC? Remember that really weird middle we talked about? We talked about this a couple times. But back here, it doesn't look like a middle. This area right here. Sometimes the area between the two peaks on the bigger wave, 1, down, up, 2, the down can be really strange. It can do weird things. Every now and then it does something that's kind of unexpected. You get like flushes and weird stuff, and it can be very volatile. And I feel like we saw something like that on IWM too. I'm trying to remember, maybe guess right here. Like this is the middle, right? It's just strange. It's not like this is a distribution. It's just that this is like a massive double up throw. I mean, it basically resets everything. It defines the next range. It's a very strange movement, you know. But technically, this is in the low. Like this is 1, this is low, and then this is 2. That's why I've been basing all of this on today, was like, this is basically like a middle of 2 M's. And even though it looks like this is the complete 1, 2, it's actually not complete yet. So it's bizarre until you look at something like RSI, and then you're like, oh no, I see it. Like there it is, right there. You see how RSI is like bowling right here? But for us if we're looking at it price action, it's like, well, what the heck is this then? Like that can't be right. Why isn't that like the peak? I don't think it is. Or even if you did want to look at it like that, it's kind of like, it's almost like you can't quite place it. And I feel like that's happened more often than not lately, where like something happens dramatically on the breakout in the middle. And I kind of wonder if that's what we're seeing here. Like it could have been a little more benign because it did come higher than I expected. I didn't expect it to go all the way to the top. I thought it was going to be like right there and test this, push this, and then come back down. And it did. It just went a little high. So then I'm like, well, if that's the case, then I just got to wait, because I think that it will fulfill like expectations if you got it right. You know, there should be some kind of semblance. And we did do that before. We did the S curve here, the big one. There should be a build out on like a widening. And we did that in the past, and I kind of left it alone. But yeah, I genuinely think that it's going to be here. So I know it's a little odd because I got rid of some of my TA on it, and then I said that I thought it was potentially kind of weak. But I have, for lack of a better word, kind of backstepped a little bit on it. And I think that we may have been right to consider this like a big widening wave that's going to come back up. And all I got to really do is determine where the heck the other peak is. I don't know exactly where to put it. There was a series of parallels that I drew earlier. Maybe it's like this trajectory, 17. I don't know. I guess that's all I can do for now. I don't want to like kill you guys with boredom. It's probably that, because that is where the drop is. It's just tough because none of these work perfectly on a MPW. Like, it's a clean enough chart. It does look good. That does look good though right there. Yeah, see, I think it's that, guys. I think it is. I think it's right there. This is right around election time. And it needs to come hit this green marker. I was looking at it on the big picture upside down, and I was like, why the heck hasn't it come back down here yet? You can just see it like visually. It's like, oh, it should be dropping down to here and checking here. And trajectories are leading there, but nothing's gone yet. Yeah, look at that. That's nice. I think your bull operators are being like playing games right now. I genuinely do. Here, let me snap this. Let's not fudge it. Let's snap it and extend it. Yeah. Son of a gun. I wonder if I'm going to end up being right about this intersection here. And it was right to just delay it to November. That's really close. Oh, man. What? Interesting. $8 like on the dot. I don't know. Like, it looks like it should be going back there is what I'm trying to say. Like, when I flip the chart upside down, I'm like, I don't get why it's not going there. It's like a head and shoulder. And then you can see like the neckline would drive you back down here. So I think if this reverses, y'all, this is going to be like a massive move. If it hits $8, I'm out for now, but that's a crazy big move. It's 80%. I'll be very happy going into Christmas time. So the premise of what I've been saying is that I think what I've looked at as maybe a negative news cycle is probably intentional in that this may actually be right. Well, I may have been right about this being the second wave. Like, this is 1, and then this is 2. And I think the third wave hasn't happened yet. And I think the third wave is probably going to break out and go all the way up to 8. You know, I get the feeling like a lot of people are kind of sick of this, talking about this, because the setup was there and then it wasn't, and then it was there and then it wasn't. The same thing happened back here. It kind of set up really well and then it didn't work out. But I've been very like calm, and like I haven't really been able to find things here that throw a big wrench into this yet. I know there's been moments of like doubt on my part. When I came up with MPW as a trade, I did it because I wanted to have other things to look at other than just AMC, like have other really good trades. And I found this one and I really liked it for the big picture setup. And I still really like it. And I think there's a reason that I'm in it. And I don't know if it's a good intuition or a gut feeling, or if it's just me seeing the data lining up really well. I don't want to pump a stock though. So if you don't like this, that's cool. I hope though that you guys don't mind me talking about it every now and then for 30 minutes a day or whatever, in order to just kind of like catch myself up on it. I'm not here to tell you what to buy or sell. So do not hear me saying that when I talk about this. I'm purely just, hey, this is one that I have a really good feeling about. I've been in it for a while. And again, my goal is to try to look at these other stocks that you guys pick out sometimes, because I want people in general to know like there's other things besides AMC to trade. If you're really serious about trading, you shouldn't just be trading one stock. That's generally thought of as a bad thing. You really want to be diversified, and so it's okay to go elsewhere every now and then. You said AMC going to 60-80 top, so that's 6 to 8 before split. No, that's not correct. 60 to 80 top is much larger than that reverse split. Well, no, it's not. Never mind. I don't know why I said that. Why did I say that's not correct? It's kind of correct. It's complicated because your average is also changed. Does that make sense? So the idea of like it going back to 60 to 80 right here, it's a little complicated because there were two things that happened. We had ape conversion, and then we also had a reverse split. If you look at the nitty-gritty details, there was a mild change there was a change in price before the split. And I can't see it right here, but it used to mark off like two different split values. And then what's also kind of confusing about that is, so your cost basis was already adjusted because of ape. So remember when ape was invented, this was at this time, this is why this doesn't work anymore. This $13 mark, so I should have sort of clarified by saying yes and no. This says 135. Let me ask you guys, was this, and you should know the answer to this if you've been in it for a while, was this $13 back in this time frame? The answer is no, it wasn't. So what happened? Well, ape was introduced. It changed the price. And then ape was reintroduced. So it's confusing because the chart had already shifted. So like I get what you're saying, but that's not actually quite right. So like when you compare it to previous time frames, like this isn't the same as saying it was $4 back then, even though it's $3.70. That's not quite right. That's wrong. So it's complex. So your average is not going to be like, if your average wasn't $6, you're screwed. No, that's not true. That's mathematically inaccurate because your average has already changed. So if you bought in back here at this price and it came back up to here, it's going to be very different. Does that make sense? I hope that makes sense. This was like $25 before ape. And I remember because it was like 25 to 27 was my price target in August. And I made a boat ton of money and then lost it because of ape. This now looks like it's $13. It looks like it got cut in half. That doesn't make any sense if it's just a 10-to-1 split. So you have to remember that like multiple things happened. It's not quite that simple. Yes, technically, if you go back in time and you look at what happened after APE, this was like $9 to $8 right here, something like that, right? And then it went down to like $3 and $4 right here, right? It did. So yes, technically that's before that split. Yeah, this would be, you know, $8 to $10 or whatever right here in this pocket, $6 to $10. But if you go back before August 2022, that's wrong. This was not $6 to $10 at that time. This was like 9 to 14 or something. So it's not really the same. Like when I say it's coming back to that original value, for us to look at that and say, oh, that original value is $10. Well, it just so happens that mathematically, yeah, it's pretty nice that it worked out that way. But that's not really what it was at that time. Like this would have been, again, I'm not trying to guess. I don't really remember 100%. But I think it was like, again, like $12 or $14. Like it was something like that up here. So the gap I remember being around 14 or something. So maybe it was like $15 or $16 right there. I don't recall 100%. So it's more complicated than, because this chart has been completely like butchered for lack of a better word. It has been. It's been really butchered. So yeah, you're kind of right. You're kind of wrong. You're kind of not wrong, but it's just kind of not far dated enough. Does that make sense, Nick? It's like, the reason I say that is because we did a little bit of an analysis a while back on people's basic cost averages. And I think what we found was that on average, most people would have this roughly as this value right here where we've got this gap. This is roughly where everybody's average costs should be. And it's complicated. It depends on where you bought, when you bought. But if you bought the entire time from when all this started in March to now, it is as it should be. It's basically in the middle of the chart. We did the math for it, and it just depends on how much APE you bought versus AMC up here could sway it, and then whether or not you've been buying low here. But I want to say we did like an average that was pretty decent. We did a good job. We were making some assumptions, but we were looking at what would people have been paying for AMC here versus here versus here, and like kind of reducing those to base values as best we could. And yeah, it's roughly around like in the 20s. Most people's averages would be in the 20s. So majority of owners of AMC who've been holding for a long time, and that's fine. That's actually right around middle of the road. It's not as bad as you might think. So I say that because if you actually have a cost basis right now of like $6 or something, or $6 to $8, that's like really good. If you had a cost basis right now of $60 to $80, that's not that good. Like that would be like an outlier. That'd be like you bought only up here and you never bought anywhere else. It really doesn't make a lot of sense, but it would be like you only bought in the highs or something. And I know there's people out there that did that, but most people are not in that situation. And then most people probably, when they bought at $4 to $6 back in the day, that's really more like buying at $20 now. Does that make sense? It probably doesn't. But if you were buying at like $4 to $6 way back here in 2020, that's not 60 to 80 now. That's like if you just bought here and you only bought here when the price is $6 to $8, now that would be like 22. You know, so it's a little confusing to say, I guess do what you're doing, I guess what I'm trying to say. Like this is, I don't know what else to say about it. I guess I'm trying to like, I'm kind of confusing myself. My average on reverse split and conversion was 55. Now I'm at 16. Yeah, because you could have been up here buying high. If you had not bought low earlier, you might have an average that's a bit higher because of buying up here. And then if you bought low in this time period, you could bring it considerably lower. I think that's part of the reason why we came down to this range. I know that there's a lot that we say about technicals, but BlackRock had like a ridiculously high average, which I don't think could be 100% true. I think that they concealed their average pretty well, but like the last reporting averages for some of those companies was really high. But then like Vanguard sold like most of their shares on this drop. So part of me wonders if they ate some of the sell-off and they took like a loss to get rid of shares that they basically bought back here and that they held for like a really long time maybe. Like it's just my theory about it is like maybe they were selling off shares that they were holding from way over here. Some of them were bought in this period, but I wonder if they sold most of these and then bought low so they could average these ones down to the same price that they had these at. So when they take it back up again above 20, the ones they bought high are now being weighted. So they maybe if they bought shares up here, now they can buy shares down here. Does that make sense? And they used probably, my guess is they used the shares that were bought in this range and distributed those here. I know it's a little complicated, but like institutions, they're really good at hiding their cost value average. Like they're just really good at it. So what was weird is I remember reading data. That's what I'm trying to say. I remember reading data like BlackRock's averages were like 160. And I was like, what the heck? That doesn't make any sense. Why would anybody let it get that bad? It doesn't make any sense. But it would make sense if they sold all the shares that they had from like way over here that they were just kind of low key sitting on, because you can mathematically, that's a way to kind of reset your average. Because you're right. Like you just said, your average was 55. Because originally, let's say you bought from here to here, your average would be around 55. That's like right in the middle. So if BlackRock or whoever was buying all the way up here and then back down, they probably had an average that was around like the 50s. And then once this drops, it's like, well, you're screwed then, right? Because now your average is in the 50s. Not true, because half of those were maybe bought low. So then you get rid of all the ones that were bought low, right? And you use those to like sell off and drop the price down. And now you can like rebuild. And now you can have an average that's not way up here. So now all these shares are gone. Now you can have an average that's $20 or whatever right here instead of having an average that's 50 by just buying low in this area to counteract what you had up here. Is another part of the reason why I'm worried that on the whole that we're not going to see what a lot of people think we're going to see. They think we're going to see all-time highs. I don't think we necessarily see that. Part of the reason is that I'm wondering if they don't need to bring it back to all-time highs, because maybe they didn't finish selling all their shares up here and they sold quite a bit. We know that. A lot of institutions sold all their shares. But let's say, for example, because remember, 160 is really high. That's up here, guys. It's like right around the top here. So if they had shares at 160, even if they bought all the way down, their average from 160 down, which we don't know, but just in theory, even if they had bought all the way down here, their average would still only be like $80. It's still really high. But that's the point, right? It's like, hey, now look, you go from here to here, you buy in, your average is like 80. You don't need to take it back up to 365 to break even or make a profit. You just have to take it back up to 80. But then you sold all those other shares that you may have been holding on to, drove the price down through that range. Now you can average down even more. So like the cluster of shares, perhaps, we don't know for a fact, that this is the case, but the cluster of shares that they had, maybe that were averaged around $80. This is just simple math, by the way. It's just averaging. In theory, if they had been buying this whole time, they may have a cluster, not 160, but like 80, right? An average right around here, percentage-wise. Now, by selling through here, you basically can buy down here. Again, it's like, this is why I think mathematics in the stock market is so important. Is now look, you can basically have an average that's the same. So if you bought enough shares down here at an average of $4.80, hint, hint, nudge, nudge, you can have, I don't think it's that complicated. I really genuinely think this is probably what's going on to some degree. And I've thought about it a lot before, so I'm glad somebody brought it up. I just hadn't really talked about it very much. They hide their average really well. And I remember thinking when they said 160, I was like, what the crap? What are they doing? That doesn't make any sense. They can't possibly be that much in the red. They would never allow that to happen. Well, maybe not. Maybe the idea is that they're re-averaging on purpose because they didn't get to sell enough shares up here. They want to sell more. So the idea of doing a secondary distribution, they don't have to bring it back up to the top if you can accumulate around that center mark. Now they have an average of like $20. Now if they bring it up to 80, they're making a huge profit. It's kind of the same game that they may have played back here too, because if they're originally were buying on the way down, they may have had an average around $50 and they were able to sell at like 70, or whatever, not 50, but it would have been like down here, the 9s or 10s. So the concept of like, we need to go back to all-time highs to distribute doesn't make any sense anymore. You don't need to. I think they're doing that on purpose. I think they're buying here because they were here. Like, I think that's exactly what's going on. And they're wrapping that, they're kind of reimagining, again, they're reforming, maybe the better word, their average around the 20s. That's what I suspect. And then the reason they're going to go back to that top is because that top represents kind of those highest cost averages that they probably have still remaining. And it kind of follows that would be like right in the middle or roughly in the middle of that zone, that we were at before. So I personally think that's probably what happened. And so when you say like $6-8 pre-split, I kind of feel like that's not right, but only because I just think Ape screwed everything up. They're making a ton of money on lending out their shares. I don't know about playing the options chain that much, but they're definitely making a huge amount on lending out shares. We already know that. AMC was like the top earner for that category last year. So they're not in any rush. That's the other thing that's frustrating is about this. Like, they probably knew back in June 2022 what they were going to do. I would argue they probably knew as early as February right here, because a lot of those early creeks that are established are still being used. And it's very annoying because you're like, well, if you knew that, then why didn't you just I don't know, man. They just shifted them a little bit here and there, but they were all pretty much there from the beginning in terms of those cat ears and stuff. They were always spacing really low. We just didn't think it was going to go that low. They've always been there. But I get the feeling like they already knew what they wanted to do for the next 2 to 4 years way back here. I almost guarantee you. I don't know for a fact that they knew about Ape, but I'm sure they've just mildly adjusted, and that's probably why we got this instead of maybe coming down, I don't know, back to the same level. It's hard to say. So I would suspect at this point that when we look back at the chart, that $20 or $20.30, that middle zone from 2020, I think that still represents the middle for now, and it does. You can see the whip around. Either there or at this particular level, which is kind of like the top zone in $32 is what it says. But yeah, absolutely. This is where I think I got the $1 value from a long time ago. If you look at the middle value here as that $20 marker where that reverse split is, you can see that's a massive slide to 0 or the 1. That was the quote unquote thesis about 1 that I didn't actually believe. And I quickly rebutted myself in that video in January. But a lot of people still quote me on that, saying I thought it was going to go to 1. That's where it came from, though, was that there's a really simple S-curve down to 1. But I think the 2s are more likely because of the current setup. And then I think that what we're looking at is that rebound value going potentially back up to 60 to 80s. And it just doesn't make any sense. Like if they did what we think they did, and we know there's a huge amount of volume here, then I would suspect that they've got tons of, probably have a lot of long-term options and stuff like that too. But I bet they've got things that we don't even realize going into this pocket up here. It just makes a lot of sense to me. I don't know. But yeah, your cost basis, just to kind of recap what I just said, and I was supposed to go to lunch 50 minutes ago, so I'm going to end in a minute. But yeah, your cost basis is not quite that simple as just dividing by 10. So if you're looking at it thinking that you have to get back down to some unearthly cost basis number, that's probably not right. If you've been buying steadily or averaging down, most people, if you can get below 20 at this point, you're probably in good shape because it's going to be similar to what happened here. And that is correct. So I don't know about GME. Yeah. GME is a little different, and I can't go through that right now. So anyways, appreciate you guys. I got to go take my lunch and get on with the rest of my day. We've got a lot. I got one over a lot today. I think we're going to have a lot going on in the next couple of months. But I'm really looking forward to January now as opposed to just this short-term move. I think this is a shorter-term possible move in elections. I'm really looking forward to January, though. I think we're going to have a good January session. So we'll see. Definitely with IWM, it's kind of opened my eyes a little bit to possibility here. And yeah, appreciate you guys. Hope you have a good one. Talk to you later.